Okay, so we're back live again. Minimize that. And what I'm going to do here is delete the last two live streams because they were useless and I don't want anyone watching them and wasting their time. So I'm going to delete this one if I know how here. I don't want to watch it later, I want to delete it. So how do I do that? I don't want an account here. Why can't I delete this thing here? What is happening here? Maybe I'll worry about that another time. What is happening here? Oh, video manager. That's what I want to do. So I'm in my video manager account, and I'm going to delete that, so don't waste your time with these videos. And oh man, I can't even see them now. What is going on here? These are uploads. Forget this. Let's just go to my channel. That's where we're gonna go. And what's currently playing? Videos we should be playing now. Yeah, we have a live stream going on right now. So I'm just going to use this. I'm just going to use this to monitor my own live stream with a bit of a delay. And I got some TV going on in the background. But we're going to jump over. Is anyone? Did Yusuf join us yet? Let's see who's here. No one's here yet. Anyways, I'll just make a little note to Yusuf. Oh, no, that's me watching. Okay, I'm live, and I'll send the link again. Okay, so let's cut and paste this link here. Copy, go over to Slack, paste it in there. Live again. Take 2. Boom. There we go. And send. So there you go, you can click on that and we're live. So let's go ahead with that. I got kid in the background, Ria's in the background. Aisha's watching Turkish television. Turkish or Norwegian? Turkish television. Okay. So I'll wait a moment until Yusuf catches up. Or maybe not. Maybe I'll just start. Okay. So now, so my previous payments were declined. Got on the phone with TDs, very quick and easy. I explained to them my little gaffe trying to get my new card sorted out, and did so. And so we should be okay to go ahead. So I'm going to go to home, just double check to see if Yusuf has joined us. No, he has not. Okay, anyway, go to home, I'm in Coinbase, and this is my usual method of purchasing. So you can see in the past there's been a number of purchases here. Let me go to home again. So you see here, these were recent activities, some few purchases here. Purchases and transfers. So this time we're going to go to BTC. We're going to buy BTC. Normally I buy Ethereum because Ethereum transfers very quickly, but I don't want to go in and out of Ethereum. I just want to go from BTC straight to Binance. Okay, so let's just do $500, and that is Canadian, as we can see, and there's my bank account, and we preview the purchase. As we discussed, this is roughly 3.8%, which is standard fees that Coinbase take. So we're going to go ahead and buy now, and this should work this time. Authorizing. I just got a text, so it looks like it has started. Yeah, confirmation from Coinbase that it has started. So the process going through, it was successful. This is what I normally see, and there's a quick email. It says your purchase has started. There should be another one following up, both in text form. It says my money's available, and there should be another email coming. So that's the way it should. There we go. Your purchase is now available. So that's how fast it is. Now I have BTC. So this BTC is available on this exchange, and as we've discussed before, this is their hot wallet. This is not my private key or my public and private key. This is theirs, Coinbase. So they're holding it for me. So if anything ever happened to this exchange, my money could go out the window, right? This exchange is what we call a fiat on-ramp. So it's very easy for the average retail consumer to come here and just grab some Bitcoin and then just sort of have it in this hot wallet. Now I'm explaining this because some of you may know, but there's a friend or two that have joined, and it could be for the likes of Yasmin, it could be for the likes of Faisal, who joined our little Slack group as well. Anyone who's joined who has not gone through this process. So I think for the most part a couple of you have, but like Mehmet, Bilal, and Yusuf probably has, but it's worth going over again. So there's my Bitcoin holdings. Now I don't want to use it here. Also, there are some fees that are associated with a direct transfer from this, let's call it user-friendly or retail purchaser-friendly interface, and then going to this type of exchange, which is obviously more complex, right? So Coinbase has an intermediary step, and that intermediary step is Coinbase Pro. And its old name used to be GDAX. So, for example, if I were to look under GDAX.com, well, it's not available. So let's just go GDAX and see what comes up. GDAX should pull up Coinbase Pro, as you see here, right? So Coinbase Pro, once you have an account with Coinbase, it immediately creates a twin account with Coinbase Pro. They're one and the same. And this is a more complex trading platform as well, or exchange. So I'm gonna log in. It's the same details. It's just I'm going to have to log in again. So what I'm gonna do is just throw up that picture. So I'm logged in. Yeah, there you go. Because I was logged in with Coinbase, I'm immediately logged in. So as you can see, this is more of like a typical exchange that you'll see here in this case, right? It's a dramatic step up from this, right? This is like the Apple, the iPhone of purchasing Bitcoin here. And again, it's meant as a fiat to crypto on-ramp, and you can keep your money here if you want. I mean, Coinbase is one of if not the top, maybe second or third exchange. Binance is they say have now eclipsed Coinbase, but this one is in San Francisco. It's all eyes on it. IRS, have their eyes all over this. Any American buying cryptos on this site are reported to the IRS immediately. So we're Canadian, so that might not be the case. But I can imagine if the Canadian CRA asked for the information, they would forward it over. So in this type of exchange, it's free to transfer from here to here, okay? And it's cheaper to transfer from here to here. Now that used to be the case. I don't know if that's changed, but that was the case. So if you wanted to avoid some other additional fees, you would do this intermediary step. Now you could do it directly. You could easily go to your account here, for example, and I could again, user interface is very simple. That was not for this. I could just go into my transactions here. Okay, just confirming that it's done, and I could say I want to send it, right? So I want to send this $480, this 0.0377 BTC. I just want to send it to some place, right? And then it'll ask, like if I click send, it'll ask you what's the address you want to send it to, and then it's fairly straightforward, right? Now there's an extra fee involved in doing that, but if you use their Pro website, it's a little more complex, but it's a little cheaper. So I'm just going to go through this extra step. You don't necessarily have to do it. So what you'll do is you'll now deposit, okay, and it'll say deposit funds. So I'm gonna pick my currency, and I want BTC right there. Be careful when you use Ethereum, because there are other variants of Ethereum, like Ethereum Classic. You don't want to, and even the symbols are the same, very similar. So you don't want to accidentally choose the wrong receiving wallet. Like, where was it here? There's Ethereum, and there's Ethereum Classic somewhere. We just saw it. Ethereum Classic. You don't want to accidentally choose the wrong receiving wallet and then post that address over here, and then all of a sudden the two coins are not compatible, okay? And then you've essentially lost your money. So what you want to do is you want to pick the right one, and don't pick Bitcoin Cash. That is a completely different forked off coin. Don't pick Bitcoin SV, which I don't even know if that's listed here. That's Bitcoin Satoshi's Vision. Don't pick that either. Pick Bitcoin. Okay, so we're gonna pick Bitcoin, and it's gonna say what is the wallet address, right? So this is the wallet address I want it to come to, right? But because this is coming from Coinbase, they've given you that easier step of just clicking over to here and quick internal transfer. Normally, you would either copy this address, or you would QR scan that and then paste that. You know, it depends on the exchanges you're going between. But because these are jointly owned or sister interfaces, they're not even jointly owned or sister companies. They're, you know, same company, just different interface. They give you this option here, Coinbase. So they already know I have this much money, right? And I'm just going to say max. I want to bring it all over into Coinbase Pro. So, you know, there we go. And there's no fee to do this. So we're just going to say deposit. Okay. So I'm just going to double check that you're with me here. Yeah, I think you are. Okay. So transaction is on its way. This takes 10 seconds, as it's saying here. Okay. Now, one of the reasons why I don't normally use BTC is because back in the days, November 2017, when everyone was scrambling to buy Bitcoin, there were problems with the hash rate and just so many people using Bitcoin that the system could not process their orders fast enough, and people were waiting hours and hours to have their Bitcoin processed, right? And in some cases days, unless you wanted to pay higher fees to get it done in hours. But no one was getting it done in minutes. And this is a fundamental flaw with Bitcoin and its blockchain, and that had been attempted to have been worked out over the last year or so, year and a half, with the Lightning Network and so forth, which is what they call like a secondary chain. So you have these blocks that are hashed out, and instead of one transaction per block in this long chain of these sort of sealed records, each block is like a sealed record of a transaction. Instead, you have the Lightning Network, which takes a block, keeps it open, so the account is open, and maybe 100 or more transactions are done in this sort of secondary layer, and then that's sort of all wrapped up. Once those are all transacted, they're all wrapped up, and then that's wrapped up again in the block, the normal block for Bitcoin, and then that whole thing is sent back to the blockchain, and then that's recorded. So instead of one transaction per block, it's now hundreds transacted per block. So it's almost like a nested series of transactions. So that in theory makes transacting on with Bitcoin faster, and apparently now there's there's much more, maybe 200 times, and I've just heard it today. There's much more transactions happening on Bitcoin than was happening back in those November 2017, and we're not experiencing those exorbitant fees or delayed transaction times. So Ethereum and Litecoin were very fast back then. You could get things, you know, from one exchange to another in literally seconds. Bitcoin was problematic, so I've never used Bitcoin before. This is my first time using Bitcoin. And so anyways, okay, now that we're here, we see that we have this much. Now I want to withdraw it, okay? So now it's on Bitcoin Pro. It's no longer here. So if you notice on my regular Bitcoin fiat user-friendly iPhone type interface, you'll see that I don't have it. It says transferred. Oh, I just lost it. But I have nothing here now. And if I go down to my account, it says transferred to Coinbase Pro. Okay, on July 17th. So that's gone. And we've lost some pennies here, apparently, in this transfer. That could just be because the price of Bitcoin has fluctuated in those few moments. So now we're going to withdraw. In this case, this is going to go between two different exchanges. They are not related, in which case we're not going to have that easy method that we had between Coinbase and Coinbase Pro. And I can go ahead and close this now. I don't need this open, so I'm going to close that. Now I'm in Coinbase Pro, and I'm going to go to Binance, because this is where I want to trade. Now, why I initially went into BTC, normally whenever I want to buy altcoins and I want to do it quickly, I do not come in through BTC for the reasons I've just explained. But in this case, I do want to be in BTC, and I want to limit the number of trades I'm making to just start, right? And so I want to eventually get from BTC to BTC/USDT. So this is the trading pair I want. Now, you can pick any number of trading pairs. So for example, if you want to trade in alts, okay, and you want Tron, well, there's a Tron XRP, so Tron Ripple pairing. Now, I'm not going to go between Tron and Ripple, so I haven't even made it as favorite. But when I was purchasing through Ethereum in the past, I definitely want to go from Ethereum to either EOS, Ripple, Tron, Pundi, for example. These are my favorites. Cardano. So Ethereum was my main sort of mode or method of purchasing altcoins, right? And why would I bother with Bitcoin? I mean, it has pairings, but I didn't want to experience any delays and any potentially elevated fees. So again, whenever you want to get into an alt on Binance, you generally have to come in through one of the main, what they call their main pairs, right? So here's one is the Binance coin. That's their own internal coin. This is and this is heavily promoted by Binance. Actually, it's one of the better performing coins throughout the bear market. They've, in some cases, if I'm not mistaken, they've 7x'd throughout the last year when everyone dropped by 90%. So they've just done tremendously well. Again, the main pairs in the old days was Bitcoin, Ethereum, and Litecoin. But as you can see, depending on the exchange, they'll favor certain main trading pairs. So here you have Ethereum and Ripple, but they've been put into this sort of like relegated category. They're still the top pairs, but you'll see BNB, Bitcoin, and alts. Okay. So the other one now is USD, which is US dollar, and then this, I don't know what the S stands for, but it basically means any other tethered or pegged stable coin. So that the S could mean stable coin. So when you go into here, you'll see a whole bunch now, and this has expanded. It used to just be US dollar tether, and now it's US dollar coin. It's true US dollar, and it's PAX, if I can find PAX as well. That's another stable coin. PAX over here. So you'll notice when dealing between stable coins, or any coin really, if you want to play volatility and you want to guarantee that your trades will be picked up, i.e. there'll be enough for you to purchase and enough for you to sell. Also, if you're selling high volumes, you don't want to be the only one really doing any trading, in which case there might not be any buyers for what you're selling, and vice versa. You might not be able to buy enough. So what you look for is the volume here, right? So how much volume is going back and forth between traders over 24 hours. And you see here there's nearly $1 billion worth of volume between Bitcoin and US dollar Tether. So despite any controversies that have been surrounding Tether over the last year and a half, which are largely being put to bed these days, they're currently winning a lawsuit, and they're definitely starting to support that for every minted US dollar Tether token, there is a US dollar behind it, backed physically in an account somewhere. And that's the whole point of this stable coin, that it shouldn't be like a money laundering, or counterfeiting scheme where they're just printing, what they're calling peg dollars, but there's no dollar behind it, right? So this is a substitute. You give them a real dollar of your own money, and you're using now US dollar Tether, one for one. and you're able to trade, 100 times a day without ever going into fiat currencies. And in this case, you're not, in the case of the United States, you're not triggering taxable events each time you go back into the US dollar. So you use the US dollar tether as a substitute, and you go back and forth hundreds of times in a day between whatever currency you're trading. So this would be the equivalent of using the US dollar to trade a stock on a normal trading exchange in a traditional market. Or you would, maybe in the Forex markets, you would be doing, you would be going between US dollar and the yen or something, or some other currency. So this is the equivalent, right? So that's the value in this. It doesn't go up or down. It fluctuates minimally between like 99 cents and a $1. But that's what they call it, stable coins. So again, if you look down here, Ethereum in US dollars, so who's trading between Ethereum and US Tether, and it's 150 million. If you look at Binance and Tether, it's 100, and that's pretty close actually. And then if you look at, when you start getting into the other stable coins like PAX, it's 40 million, right? So people trading between PAX and Bitcoin is $40 million in a 24-hour period, compared to nearly $1 billion. So here, if you make big orders, you're not gonna affect the books. There's people out there who are willing to buy your big orders. Whereas if you're dealing in PAX, there's not that many people willing to buy. And again, you can look here and you'll see what's in the order books, right? So you'll see, for example, at this price, someone is selling 582 Bitcoin, right? Someone's selling 1,700 Bitcoin, right? At that price. So they're willing. They're willing to buy at that price. That's the price they want to pay. They've put in an order. It says, I want this many. I want 45,000 Bitcoin. Did you see that? I want 45,000 Bitcoin, and I'll pay $9,000 a Bitcoin. So here's 10,000 Bitcoin, 67,000 Bitcoin. So these are big players here. Let's do a quick little amount here. If we're gonna do, I should be able to do that in my head, shouldn't I? So 67,000 Bitcoin times $10,000 roughly. Someone put an order for $670 million. Well, anyways. Well, here's 2,000. Here's 2,500. Here's 25,000. That's 25,000 Bitcoin someone wants to buy. Someone's selling here 9,000 Bitcoin. These are big players, right? I'm dealing with 0.037 of a Bitcoin, and so for me, I don't. Guaranteed people are going to buy my Bitcoin wicked quick. So your trades are going to be moving very quickly, okay? Almost instantaneously. If you're dealing with an altcoin with low volume, the books here are very low, then no, you may be sitting on a trade for minutes, and the price might actually move while your trade is partially executed. So if you're going to do volatility trading and what Faisal has taught me and called scalping, you want your stuff to move quickly. You want to make sure you're never stuck in a trade because there's no buyers or takers, and that's the point to that. So this is a great place to be, BTC, US dollar tether trading, and that's where US dollar tether pair, and that's where I want to be. So that's why I started with BTC. So now we're going to withdraw. And withdraw, again, we're going to select the Bitcoin currency, okay? And now it's asking me, where do I want to send it? What's the destination? Okay, so here we're going to go to my my account in Binance, and I'm going to leave this temporary interface. This is the advanced thing, the advanced portal or interface. And I just want to go back to the home. And this is a bit more user-friendly. So there's the basic exchange, advanced exchange. We were in the advanced, and this is a bit more user friendly, right? It's always getting better. And I want to go to deposit. Okay, so I'm gonna bring in some BTC. So we're gonna say deposit, and this is my BTC address. Now this is my public address. There's no private address here. There's in the private. Sorry, I should say public key. Which is your address, it's your account. The private key is your password, right? So in this case, Binance is holding those private keys. This is not my account. This is, as they say, they say this in the traditional world, or people who are critical of traditional banking, and they say it for the crypto world. If they say not your keys, not your money. Same thing in the bank. If your bank is in, if your money's in a bank account, that's not your money. That's money you've given to the bank, and it may be insured by the government up to, let's say, $60,000 per account, but that's not your money. You've given it to them so they can invest it, they can do whatever, they can go bankrupt, they can lose it. So again, in the crypto world, the slogan is not your keys, not your money. So in this case, I'm moving between two exchanges where they're holding my private key. They've associated it with my login here. Okay, so they've associated it here. I'm just going to double check to make sure that everyone's still with us. Okay, they are. And Yusuf is watching here. So they've associated a private key that they hold with my account. Okay, but I don't have it. So right now they're just giving me the public key. Now, I can transfer it out of here to my own cold storage, which I'll touch on another day, and I have the private keys to that. But right now I want it to be on an exchange so I can, be trading back and forth rapidly. It's very slow to go onto your cold store and go back and forth between your Trezor or your Ledger wallet, or even a paper cold storage account where you, or even a code you just memorized in your head, some long, I guess 200 digit key, and you're trying to make trades, by the second. So you need to take some risk to have your money, your cryptocurrency on an exchange, and them possessing the private key. Okay, now that's why you shouldn't go with exchanges that are not trusted. So Binance is now the most trusted exchange, the most successful exchange. It's surpassed Coinbase in usage, in trading volume. And so I've never had an issue with them. And now where they've recently had something like $40 million stolen, what has happened in that case was they had enough insurance money. They have a fund to tackle that sort of thing, and they reimbursed everybody, and then they went headhunting. They basically went, not headhunting, that's the wrong expression. They went bounty hunting, I suppose, chasing down the hackers who managed to steal funds, and it was basically done through phishing. It was users who were phished, and then they gave up their details, and then the money was lost that way, not through a hack of the exchange itself. So they're a very robust exchange, and again, as they say, having made it through the bear market and done so well, and had their own token just do phenomenally well, was a surprise to everybody. And now they're, I don't know if you know, but they're based in Malta. They have an exchange out of the Jersey Islands between England and France, and they have one in Uganda as well. So they're expanding, and they just find workarounds to everything. When the Chinese government were on their case, they moved to Japan. Japan got on their case, they moved to Singapore. Singapore was not the friendliest, so then they moved to the jurisdiction of Malta. So they've adapted through very intense times. So I trust them. So I'm going to take this public key. Now you can take this public key too, I don't care. And you want to send money to my public key, I don't care. You can't take anything out of it unless you have the private key. So you can give this to all your friends. You can be a hobo on the street with like this key and a QR code sign, and basically people can donate to your address, right? This is the one you want to give out. This is, you want to associate. You can put this on your YouTube account, and you can say, hey, donate to me, sponsor me, right? In fact, here, watch. I can do that. Well, this is my BTC account, so I'm not, well, maybe, why not? Go to your YouTube channel and say, please donate, right? So actually, you know what, watch, I'll show you how easy it is. So you just go to your where's my comments? Can I make comments? I don't even know. Can I add something to this? Am I streaming here? I'll just add it here. Please donate Yusuf. And so here. So basically, as you can see, this is my public key, and now Yusuf can copy and paste this and send me money, right? And it'll go into my Binance hot wallet. So let me copy this address. I'll just copy. Now it's in my clipboard. I'll go over to my withdraw BTC and Coinbase Pro, and I'm going to paste that in there. So that's where I want it to go. Okay. And I'm going to say max. So this is all my BTC. Now it has dropped in value, because BTC has probably dropped in value over the last few minutes. I don't really care. Now there are some exchanges that you can buy Tether tokens rather than BTC. In this case, you wouldn't have this drop happening because it's pegged to the dollar. So this is a case of if you take too long to do anything, it could go up or down. That's what you play with, because or that's what you're dealing with, because over the course of 10 minutes you could have fluctuations in the price. But I like that volatility. I have no problem with that volatility. It could turn around in the next half hour and go up, so I don't particularly care. And I'm going to be going between Tether and Bitcoin. So for the sake of 10 minutes, 20 minutes, it's not a bother to me, right? Now I wouldn't leave it in Bitcoin for 2 or 3 days, because my purpose here is to day trade, not to hodl or swing trade. And if you were swing trading, you'd want to time your entry into the market better. You want to come in at a low, and I'll explain that in a second. And you want to go out on a high. But day trading, it doesn't quite matter, and you're not going to time a very specific low to make a buck on a trade. So it's not that big a deal. So I'm going to withdraw it now. Go ahead and click withdraw. And this is, I'm using here, they're going to send me a code, temporary code via text. That's Coinbase's way, so I'm just going to put those numbers in here. So that was sent via text, and just confirm. Yes, so withdraw funds. And so that's their way of two-level authentication. They don't use the Google Authenticator, they just send you a text. So that's done, okay? So I don't want to add this to my address book. I don't particularly care, so I'm just gonna cancel this. Each time I'll cut and paste the address. I'm not gonna name it and have a quick reference within Coinbase. I don't do it that frequently. So now you see the BTC is gone. I no longer have it. If you check my wallet balance, it could list a whole bunch of other tokens which I don't have as well. So if I go to my wallets on the Pro, you'll see nothing. I hold nothing here, right? And Bitcoin is gone, right? And if you look at withdrawals, there'll be a record of my withdrawal today on July 17th at 8:40 p.m. I guess that's it's not our time. I don't know whose time. Oh, I don't know what that is. Central time. So that went out, right? Now we want to. Okay. So destination address, transaction hash. Okay, so we want to make sure now that that's gone to Binance. So we'll just go to my balances here and we'll see. And so far it's saying, what is it saying? I'm gonna hide the small balances. So it's saying I have nothing yet, right? So this is small balances where you've had like leftovers from previous coins you might have owned. I have never owned any of these coins, so but there might be a little bit of Pundi that I had once or something like that. So you just hide these, and it's saying here that I have nothing, so it hasn't come through, and I'll show you how to check that in a second. But it's saying that your 24-hour withdrawal limit is 2 BTC. So per day, Binance will only let me pull into cold storage or move anywhere, I believe. Effectively $20,000 worth of money. So that's better than any bank. I mean, you're not going to be able to transfer $20,000 out of a bank at all. That'll take you weeks to do that. So, and if you have a higher verification standing, you could probably increase that, right? So let's go to our withdrawals, deposits, and let's confirm what's happening. So we'll look at the history and we'll see that on this day that was completed, right? So this is where you just keep up to date and see whether the transaction has gone through or not. So normally when it is processing, it'll tell you that it's working through portions of, I don't know how to describe it. Let me see if no. It verifies over a number of steps, so it might take like 30 to 33 steps to verify a transfer, and it'll tell you it's processing that. So I'm not sure why it's not showing it for BTC. Normally it does. So let's double check again and see if it's processing something. So total balance, recent deposit history, did not arrive. In some cases, deposit can take a few hours. If your deposit has not arrived after a short time, it may be due to congested blockchain or incomplete transaction. So this I don't like this, and this can happen with BTC. So if this has happened, what we might do is we might pause the live feed for now. And I never get this with Ethereum or these other tokens that are much faster. Their blockchains are faster. These take a matter of like 2 minutes, really, even through all the authentication. But Bitcoin might be a different beast, and this is my first time really going through that process. We see that Bitcoin has Coinbase Pro has confirmed that it has left. They're telling me I have zero balance, so it has left. And this is always the terrifying part for a lot of people. They're just like, where is it now? It's it's being basically processed by thousands of computers, or it could be sitting in a queue where a number of computers just they'll get to it when they get to it, or they don't want to get to it because I didn't bump it up with a higher fee for the miners that are carrying out the transaction. So Binance is saying deposit success. Well, that was very quick. Deposit, hey, your Binance account has been charged. All right, that's really fast for Bitcoin. So let's double check that again. Good. So we don't have to pause this live stream. We can just get to it. So let me just double check my emails. So it's come in. Binance is saying success. Your account has been recharged with this much BTC. If activity is not your own, Okay, so I'm happy. I'm pleased with that. That's been as fast, if not faster, than Ethereum has been transacted in the past. So let me just refresh and see why it has not shown it. Here we go. So there it is. That's my deposit. It's gone through, completed, gone through, and my balance now. If we go to my balance, it should show my balance. There we go. BTC. Okay, so we have BTC. I don't know why it's not showing me, but we have BTC, and now we're ready to trade. Now this is a new feature of Binance. Just brought in margin trading. I don't want to touch it. Look, I would barely use my own credit card. I still even haven't used my own credit card. There's a huge risk in borrowing money to trade. So margin, typically, and Faisal would know this, other people might know this, but essentially margin means you're going to put in a certain stake and then you're going to borrow the rest. Now there are some really shady exchanges that will offer you 100 times margin. This is a complete psychopathic risk. Like, you are essentially saying, I'm going to put in $1 of my own money, I'm going to borrow $99 of someone else's money, and I'm going to go trading with that. And if you lose it, you now owe that $99 of money, right? Now if you let's say you long a trade and you bought some hoping it's going to go up, well then in theory the absolute limit of your getting wrecked or destruction is when your whatever you purchase goes to zero. So let's say you bought one Bitcoin at $10,000 and then it went to zero overnight. Well, you've borrowed at 1 to 100 leverage. You put $1 in of your own money. You borrowed another $99 and your Bitcoin went to zero. Well, you owe $99 now, right? The risk is if you short something, and in theory it could skyrocket to the moon with no limit. So it doesn't stop out at zero and you owe how much you lost. If you shorted something and that the price of that asset just skyrockets, well then you owe that difference and it could just go exponentially up. So leveraging is very risky. Binance, I believe, offers 5-to-1 leveraging or 5x leveraging. I don't think they go as high as 100. So for $20 that you would put in, you could borrow $80 maximum, and that's if they vetted you and so forth. So this is a new feature of Binance. The exchange is growing and growing. And as I say, why I love cryptocurrencies is because I'm not savvy in the traditional markets. So when you have the whole space growing and you have the complex products of the traditional market sort of gradually being incorporated into the crypto market, you're able to keep pace actually, rather than you're constantly behind the knowledge curve of these massive ranges of products, and all these traders and brokers who are licensed to basically lose your own shirt, right? So in this case, it's in your hands. You progress as you see fit, and I wouldn't touch margin trading, but it's there, and you can learn at your own pace. I don't think I'm a good enough trader to margin trade. It's very, very risky. So I'm just going to go to the exchange, okay? So I'm going to go now to the advanced exchange. The basic for me, I've already kind of gone past that, so not to sound arrogant, but it's a little too basic, and there's functions I need in the advanced exchange. So here we are. Now we're in the BTC to US dollar tether pair. Now this is the meat and potatoes of where we're trying to get to today, and here is the price of the Bitcoin ready to go. And if I put in, for example, 100% to purchase, now why is not showing me? Oh, I have BTC, excuse me, so I'm not buying BTC, excuse me. So I'm gonna put it here, 100%. Now it shows how much I have available. You see, that's how much we have available, and there it is represented in US dollar tether, which is approximately close to the US dollar in price, give or take a few, virtual bucks here. Now, so this is available for me to sell, okay? And this is what I want to do. Now I want to time selling of my BTC, right? So obviously you don't want to sell on a low down here. You want to sell on a high. So we could be reaching a bit of a high soon, and then I would time my sell, okay? So let's just see, is Yusuf with us? Yeah, I think he's still with us, okay? Oh, we have someone crying in the background. Now I haven't heard anybody. I don't know if Yusuf can talk. Probably not, right? Because I don't think you can hear audio comments. This isn't like a conference, so I've kind of muted my own voice because of the delay, and it's hard to hear what I'm saying. So I'm just talking, and then there's a 10-second delay, but I can respond to, I guess, comments down here, or there's a way to have live feed comments. Normally you see it. Oh, it's over here, right? So I'm just gonna test this. Testing. So because I'm trading, I'm not really gonna be looking at these live feed comments. Oh, here we go. So your BTC is in Coinbase Pro now. Okay, so yes, it was, and now it is in Binance. Okay, so that works. There we go. So unfortunately, I'm not using two screens. My setup here is one screen. I'm using, and this, Yusuf, you're gonna like this. I'm using my now 6-year-old Surface Pro, which is absolutely a workhorse machine. It's a small screen, but it's very, very high resolution, so I can see all these little details that I need to see in here, and I can shrink all my little, like, I don't need the volume to be like this, right? I can shrink my volume like that. And as I've said, I don't like this interface as much as I like the desktop app. So this is the Binance desktop app, and you can see it's much more basic. If I want to sell, well, if I'm in a position where I don't own Bitcoin, I just interchange between these two. So if I own Tether, well, I'm gonna go switch to the buy Bitcoin function, and so I just save real estate with this setup. The problem is the tools over here are not as well equipped, right? And there's a specific tool I really want to use. I do like it used to be, sorry, let me make that correction. It used to be that the web portal had limited visual, I guess, settings, I should say. So one of the things I like to do is I like to set these lines up so the colors are a bit easier for me to see, right? So, for example, you can change some of these details, and a few things have really improved on the web portal. One of them is that it maintains all your little settings, right? Even when you log in and log out, it maintains the settings that I want to achieve here. So, and again, if I jump into the day, right, you'll even see a whole whack load of it's very compressed. So let me just go into the hour, for example, here. You'll see a whole bunch of marks and technical analysis, I guess, I don't know what to call these things, indicators, my own little, calculations and indicators. So it retains them all, right? So anyways, this is an hourly chart. This is something I want to show you. You want to jump between a daily chart, a weekly chart, monthly chart, minutely chart. So this is Bitcoin over each one of these candles is a month, okay? And these are trends. So these lines represent trends, and they look backward at previous movements and action to then build up an analysis, right? So these are lagging indicators. So they look at previous action and then develop sort of an average or an estimate of where things could go, potentialities and so forth. So that's why you would see gaps. Now if we go to weeks, for example, you'll see that it can fill in that space because it has a huge history of many weeks before that, right? If I zoom out, you'll see that at some point it doesn't have those calculations because it used that information to generate this. So that's what you would call lagging indicator. So again, if you go for days, so this is pretty much Binance and its history of following Bitcoin. And if I'm not mistaken, this is a log chart. I wonder where I would have set it up, but I believe this is a log chart. I could be wrong. Let me see, 20,000. No, perhaps not. Perhaps not. Maybe this is not a long chart. Okay, but anyways, this is the Binance's complete history of by the week of the price action. So what we're looking at when we come to candles is, and I can explain this. Actually, I'll explain this when I get into the minute chart. And so when it comes to let's say hodling, okay, there's a totally different strategy. You're looking at weeks, right? So you're looking to buy here. You know what I mean, and sell there, or hodl to the moon. Just let it keep going, as they say. The moon, moon boys. Moon boys are people who believe that you're going to go from here to the moon. Those are moon boys. It's the equivalent of fanboy. So if you were an Apple fanboy, being called a moon boy is the same thing. So basically, you buy here and you hodl to the moon. So that's a long-term strategy that has no stress involved. You take money you don't care for. You're going to put it into something frivolous, you dump it at a low point or any point, it doesn't matter, because ultimately you believe Bitcoin or whatever cryptocurrency is going to the moon. You buy it, you put it in cold storage, and you forget about it. You're not really going to deal on this exchange in a weekly time frame. This is just if you want to have a look and boost your confidence to see, oh well, you see it's going to happen like this, right? In which case this doesn't even have the history to really prove Bitcoin's merits. I would go into another trading app like TradingView. I don't have it open right now. Actually, you know what? Let me dip into it. So if we go to my bookmarks here and we go to my analysis, where's TradingView? Where do I even have it here? Exchanges? I can't remember where I put it. Let's just go to TradingView. Trading. So I have an account with that, and it might just load up. Now, I don't use TradingView for anything other than just to... Oh, I gotta sign in? Come on. I'm not even gonna bother. Okay. Oh, it remembers me? Okay, fine. Okay, so if I look at TradingView, and then you can jump into... Geez, it's not even set up. I thought I had this set up. Markets, cryptocurrencies, BTC, Bitcoin. Okay, and then there are different exchanges that are listed here. So so you have BTC, Tether. Where do I want to go? I want to see BTC US dollar. Okay, and then I believe they give you different exchanges because it may differ from exchange. So you have Coinbase, how Coinbase sees Bitcoin performance against the dollar, Bitfinex, and there are variations, you see. So 9697, Bittrex, Gemini, Forex, So Gemini is run, this is an exchange run by the Winklevoss twins, those two roommates of Mark Zuckerberg, who had their ideas stolen from them, and they were paid off late in the developmental cycle of Facebook. So they got several millions and millions of dollars in a settlement, and now they're quite big into big cryptocurrencies, and this is their exchange, right? So they have an exchange. Bittrex is an exchange. Bittrex, I believe, is the one that you now need $10,000 to even open an account, or that could be Bitfinex. Can't remember. The other one has margin trading, and so each exchange has something different. Each exchange has a slightly different price. So you would think, oh, I'll just buy it on Bitstamp and sell it on Bittrex. This is what's called arbitrage trading, when you buy it in one market at a depressed price and you sell it in another market, and you have to do it really fast because the prices catch up. You see, now we're only $10 different. So arbitrage trading is very, very, very difficult, and this is done traditionally through bots, and it's just like an automated script that buys in one exchange, sells in the other. And as you can see, the time it takes to transfer BTC from one exchange to another may even negate any point in doing this, right? So, but arbitrage trading between these exchanges generally evens out the price very quickly. So when we look at Bitstamp, I believe Bitstamp is one of the oldest exchanges with a history. So if we go to the weekly, where's the weekly chart for Bitstamp here? And you know what? It changed. It had a much better layout before. Why is it different? I have a better layout on my phone even. Oh, full feature chart. That's what we want. We don't want this rookie stuff. Here we go. Here's the chart that I like. Okay. This is the chart that I want to use. So in this chart, we can see a much, much longer history of Bitcoin than even Binance shows. So here we're zoomed out. We're on the daily. Let's flip to the weekly chart, which really should have a star beside it. And on the weekly, this is the total trading history of Bitcoin, and here you have like a 200-week average that chimes in. Again, this is an average of price action before it, and it's a projection, so it needs previous 200 weeks of history to start even projecting. So it has that history, but when you go to Binance, it does not have that history. If we look at the date here, we're looking at Binance really started dealing with Bitcoin trading on August 2017. So you can see if you just follow that line down from here, that little projection line. So, oops. Oh, I lost it. Yeah, August. Whereas, if you look at this exchange, they were dealing in Bitcoin for ages. Okay, why can't I get rid of this? Get rid of this ad. Get rid of it. See, I don't have a paid TradingView account. I know Faisal does. Get out of here. Yeah, hide. So there's some features I don't have, okay? But Faisal has them. I know he has this. So we can see here, if you're an investor on the log chart, so that was a log chart, okay? You can see if you're a hodler, okay, and you bought down here at $2.40, forget about it. You're at 10,000 bucks now, right? So it's a totally different strategy, right? This is when you start looking at weekly candles, right? And you're like, buy in here at 200 bucks, and now it's nearly 10,000 bucks. So you wouldn't trade in the weekly graph. This is just if you wanna soothe yourself before you go to bed because you lost money that day, and you're like, oh, ultimately I'll be okay. And you look at this graph. Now I'm not going to bother going into dailies and monthlies when it comes to this graph, because I don't use TradingView to trade. It's not even a trading platform. It's just a viewing platform. So you can view all types of other assets, not just cryptocurrencies. You can look at gold. You can look at dollar. You can look at various stocks. So here we see, and I've showed you guys this before, my projection of what I think will happen to Bitcoin over the long term, and again on a weekly graph, and these are weekly analyses. So here you see from the peak of November 2017 down to the all-time low in December 2018, so that's 1 year, and then you see the rising as a phoenix from the ashes to where we are today. Okay, so that's just your comfort blanket, and this is my hopes and dreams, and this is where the Moon Boys, they all think we're going, and yeah, I'm a Moon Boy to some extent. So, but in day trading, we're not doing any of that. We're not even going to go on the daily. So the daily candle would also be for swing traders. Okay, so if we go back here to the daily candle, the daily candle will be people who are looking for opportunities over a week's time. So you would buy at this peak, or so you would sell at this peak, and then you would buy maybe somewhere down here, wherever you're thinking the action is going to go, the price action. So even, you know, if I were a swing trader, I might even follow my own little predictive path here and say, well, I think we're well ahead of where we should be. If I'm going to go back and look at the weekly, right, and I'm going to say, look, you know, over the course of the next year plus, and I just kind of made this up arbitrarily, but if I look at, oops, I shouldn't have done that. I don't want to do that. I like that line where it was. How do I go back? Uh-oh. I don't know how to go undo something. Oh, here we go. Undo. So, you know, if I look back at previous price action and sort of this volatility on the weekly, see, per week, this is what each candle was doing. Well, you know, I'll draw something similar. I'll say I hope Bitcoin follows the same trajectory. And I looked at, you know, sort of the length of time between these kind of like these green lines that I've set up here and the overall height on the logarithmic scale, and I'll be like, well, you know what, this is what I think is going to happen. So, you know, the recent rise in Bitcoin is so parabolic, you know, it's really close to this mania here, that ultimately it's not sustainable. You get what they call blow off tops, right? Just blows off, like, you know, like a snow on a peak of a mountain. So here we have similarly, this path does not look sustainable, and this would be more akin to how Bitcoin has behaved in the past. And so again, if you are a swing trader, you might look at the weekly, and then you'll go back to the daily, and you'll go interchanging between these, and you'll say, well, based on that, I'm not really confident where Bitcoin's price is up here, so I'm gonna wait till it drops down to 7,500 or whatever, and you're making purchases, you know, on and now this is kind of, you lose sleep on this, and why I don't like swing trading personally is because you're playing between technical analysis, where you're just drawing lines. You're like, well, you know, this is the trend we're on here, and if you look at you know, this trend here, okay, well, you look like you got a convergence and blah blah blah, and then when it gets in here, you break out to the upside, break out to the downside, and the 70% likelihood based on classical analysis, and it's all nonsense. You have to buy into classical analysis. You have to buy in that there's a history of you know, millions of, let's say thousands of these triangle formations happening, and there's an actual pattern in these cases where you have like an equilateral pennant, and you get, you know, they'll tell you like there's 70% chance of a break to the upside if you're coming from a, you know, down here, and all this nonsense. They'll call it classical TA, and it's based on just a sort of like an almanac, really. It's like predicting the weather based on a farmer's almanac. How accurate is that going to be? Now, the problem is that if there's a whole bunch of people that believe in fortune telling, a whole bunch of people that believe in astrology, and they behave accordingly, there's a psychology to this pattern, because this pattern is basically people buying and selling. It's human psychology here. So if there's a whole bunch of people that believe in something, you know, and the fortune teller tells them, you know, at the next equinox or the next eclipse, you know, this is going to happen, then you might see a whole bunch of people running for the hills because the tsunami's coming, or the god's displeased and they need to sacrifice a virgin in the volcano, and so forth. So in this case, TA is self-fulfilling. The more people that believe in TA, the more you can actually use it to predict, right? So this is the curse of TA, and why I'm not big on it, but it can work out sometimes. But it's, in my opinion, it's a dark art, and I've not been right enough times to use swing trading to become profitable, so I'm not going to bother with it. And that's why we're going to leave this chart, and we're going to go to the Binance minute per minute trading. So we're going to go here. So this is each candle here is a minute. Now, why, we touched on this before, why the volume is important is that per minute, see this gap that formed here? That's amazing. That normally does not happen when you have high volume trading on the minute scale. basically it means this candle ended and someone started buying at a higher price. Like in between that minute closing and a new minute opening, the price jumped. Normally this doesn't happen. So if we go to a low volume pairing, so here there's some here, $200 over the last 24 hours, and this is BTT. So this is the BitTorrent token. So this is BitTorrent, that old torrent exchange. They have a token now since they've been bought by Tron, and so people trading between Bitcoin and BitTorrent. Now if we go to their chart on the minute, you're gonna see massive gaps, massive gaps between the minutes, and basically it means there's no one taking your tokens, there's no one buying. Like look at this, there's so many minutes that have gone by where no action is happening, no one wants to buy anything, right? You can see the orders here, they're for like, you know, 174, you know, BitTorrents and so forth. And so this is nonsense. This is, you know, you don't want to be day trading in here. When you go to the daily charts, you'll see that the action is a bit better, and you know, if you were buying and selling on the day, you could rest comfortably. By the end of the day, your transaction, your trade would be taken up. Either if you're buying something or selling something, it would be accepted, and there would be a counterparty on the other side, either buying or selling with you. But on the minute, no, there's nothing going on. It'll take 10 minutes to complete a trade if there's someone in the order books who's interested in the order you've put in. So, you know, you got to look for, like, if you're selling way too much here, let's say you're selling way too much BitTorrent, and there aren't people who want to buy that much, it could just be sitting there, or you need to wait for 10, 20 people to come and gradually chip away at your order, and that could take the whole day. It could take here days to complete orders. So you don't want to be day trading in here. There's no volatility, as you can see, no volatility, nothing's happening on the minute, and it's pennies here, right? So when we look again at the volume, I don't want to be messing with low volume trade pairs. That's not where day trading works, right? So I'm going to go back to the US dollar tether, and I just see tons and tons of activity here between Bitcoin and US dollar tether. And when I go there, I know there's tons of people got crazy big orders. So what's my little $500 order? It'll just be swallowed up easily in seconds. So here we look at the minute graph and we see massive volatility. And again, if we're looking for day trading, we're looking per trade. I want to see a potential to make 1% per trade, right? Like if there's no volatility, right? If I zoom out here, if there's no ups and downs going on, if it's a boring little chart where it's just straight across, then you're not making money on any sort of fluctuations or noise. You know, even if there's maybe no major swings going on for the day, but there's this kind of what you call noise, just, you know, trading through the day. Look, these are good swings, you know, like this. I mean, you could lose 1% here, but if you're good and you can time it, you want to catch that and then sell there and then wait till it falls and then catch that. And this is exactly what you're looking for. So this is great. You're looking for high volume, right? So again, you can trust that you're not going to get stuck in a trade. There's counterparties to you, and then at the same time, good volatility. And this is something that I learned from a trader that he has a nice little channel. I've recommended it in this Slack group here. So if you go to tools, links, and apps, I've recommended this fellow here, Tony Ivanov. He's a kid. He's literally like 17 years old, and he trades penny stocks. He doesn't really touch cryptos all that much. He has on a couple occasions, but he had a video it's now been removed, but a video on how to scalp, right? And he took his penny trading traditional market scalping techniques and he directly transferred them over to the crypto world. And I watched his videos, 45 minutes teaching me exactly how to scalp, and it was exactly in line with the techniques Faisal once told me. And we were thinking about how do we get into day trading and scalping in the traditional markets, and where cryptocurrencies are beneficial versus traditional trading, which I'll touch on in a moment. This is where those techniques merged beautifully, and we're gonna explore those today. How to set up a trade, how to see where the right opportunity is. And unfortunately, Tony Ivanov, he's got tons of amazing material. Amazing material. So if I just click here, it's just, if you want to learn how to trade, and he even talks about his own sort of how to manage his own emotions. Like I said, he's just a kid. You know what I mean? And he's just got tons and tons of videos. It looks sketchy, but I applied his technique in this case, and it worked. And as I say, it was in line with what here, how I trade cryptocurrency penny stocks. So if we just jumped into one of his videos, skip the ad here, he takes you through step by step, and it's remarkable. And that's one of the reasons why I like cryptocurrencies, because kids like this are kicking my butt all over the place. So he goes through all these techniques. He taught me all about the Bollinger Bands, which I'll teach you about again because his video is no longer there. I wonder if this is the actual video. Is this the one? I don't know if this is the one I saw about 1.5 years ago, because this might be it. This might be it. I'm gonna save this. All right, I'm gonna save this one into my own financial file here. So I don't know why he would have taken it down, right? But you see these sort of lines he's drawn, and he's looking for buying opportunities. So I basically applied this technique. So I'll come back to that a little later. We'll close that. So in Binance, now here are the things we're looking for. So when you're looking for a good day trading pair and scenario, right? You want to look for a consistency in this graph, and I've added my own here. He doesn't suggest using this one, but he uses this, which is called the stock or Stoch RSI, and this is volume as well, which I don't really need it so much, but it's good to have. And he recommends using these Bollinger Bands. Okay, and so I've added the MACD, and I keep the volume, and yeah. And then I just change the colors because I want to see the blue over red. So, where's the setting here? There used to be a way I could change the color settings. Where's the color settings? Because I want to see the blue pop a little bit better over the red, and it's it's for a bit of clarity. When you're making these decisions so quickly. Is it here? Where is he? Let me just pull this aside. Here we go. Okay. So I'm just going to change, when it comes to the Bollinger Bands, you see them here? I'm going to change the format because I want to see a brighter blue. Okay? That's the upper. Actually, the Bollinger Bands doesn't matter. What am I talking about? You know what? Let's just do that. Let's just change the Bollinger Bands to a different color. So yeah, so these lines now are a bit brighter, okay, and this is where I want to change the colors, okay. So I'm just going to change this to a brighter blue, so it just pops. My eyes can see it better because this is important. This is important. Whenever the bright blue crosses over, and I'm going to make it bright red. This helps signal. Oh, that is bright red. Let's try orange. Let's see if that pops better. Is that a good pop? Nah, let's go back with red. This signals a buying opportunity. One of the signals I'm looking for. Okay, and that kid Ivan taught me. So let's go over here as well. I'm going to do the same thing. I'm going to change it so that it's aqua and it pops for my eyes a bit better. There we go. Okay, and actually I want to see those bars as green. So these adjustments weren't that available at the time, and I preferred the desktop version. Whoops, did it wrong. Hold on, I got someone in here making too much noise, and I'm sending them out. Did I do something wrong here? I think I did. I want that one red, and I want this one green. Okay. So there's some... no, green's not good either. Green conflicts with the blue. I'm going with yellow. No, white. Come on. White. Okay. So there. Okay. So... no, that's not good either. Okay, sorry to waste your time, but gotta set it up right. Need to be sharp. Okay, there we go. So there's a number of signals. Oh, look at that! Look at that! So look, I'm holding on to BTC right now. Now sounds like a pretty good time to sell. And then catch, and then so I'm gonna sell now. I'm gonna say all in, and I'm gonna put my order in to sell all my BTC right now because that's insane. So I'm gonna sell right now. So I've just put in my order. So my order is in. Okay, it should show up in my order book down here. Okay, open orders. Sell for So it should be there, and then it should have sold. I think it actually sold. Let's see. Yeah, see how fast that was? It didn't even hit my order book. So here's my order history. I sold. Bam. Oh my god, what is happening over here? That is skyrocketing. Look at that. Look at that candle. Boom. Now it's going to come down. So now I'm in Tether. Okay? So now it shows here that I sold my my Bitcoin for $9,800. That was the average price, apparently. The whole order was filled. Total of $373 filled. Okay, so now I got someone making noise coming in here. Now I got 0 orders open, and that's my order history, and my funds will be in should show me in Tether right now, right? So I'm just gonna hide small amounts, and it shows me I'm not in BTC, I'm in Tether. Let's go in here. This is my total balance. It should show me in Tether actually. I'm just gonna quickly dip out. I'm gonna let this crash because it's shot up, and I don't mind if it crashes. I need to wait till it goes back down to a nice buy-in point, right? So I sold somewhere up here, and if it crashes, then I want to buy in somewhere down here. So it needs a few minutes to play itself out. So I'm gonna go to my, in the meantime, I'm gonna leave this thing, and I'm just gonna go to my just check on my funds. Okay, so go to my balance, and it should show me in Tether. I just want to confirm this, right? So showing Tether. See? So there I am. I'm holding Tether right now, US dollar Tether, and that's pegged at, again, at a 1-to-1 ratio with the US dollar. So I can go to bed tonight, and Bitcoin can go up and down, and it doesn't matter. And I know I have a synthetic dollar, a virtual dollar, just holding value. So that's the thing as well. When you're day trading, you're also going in and out of Tether because, when you're swing trading, you're also going in and out of Tether, because you don't want to go into fiat, right? You don't want to be triggering taxable events every week or so when you're playing swings, and then at the end of the year, the U.S. government or the CRA looks at your account and says, you've been in and out of the Canadian dollar, you've been in and out of the U.S. dollar all year long, you've made 52 trades. Guess what? That's income. Pay me, depending on your current income. Let's say you're making $80,000, and then this is on top of your current income. It's going to be taxed at a much higher rate. So everything you've made in crypto gains could be being taxed at 40%. So this is why you don't want to go in and out of fiat in every deal you make. This is why you don't want to use exchanges like Bittrex or Bitfinex and use fiat to Bitcoin trading, and especially on day trading. When you're doing 10 trades a day, you don't want to do that. You don't want to be taxed 40% on everything you do through the day. You want to accumulate all your trades, have them not enter a taxable event like trading into the fiat currency of US dollar or Canadian dollar. And you want to get all the way past a year. So you've been holding an asset for a year, like a house or a painting. And then after that year transpires, if you want to pull it out into Canadian fiat, fine, okay, pay capital gains tax. But you don't, and that would be like roughly 20% or something. So you don't want to be paying 40% on your annual gains because you're going in and out of the US dollar or the Canadian dollar. So this is where you want to be using Tether, right? And again, whether you're a swing trader or a day trader, you can go to bed knowing that it's stable as a tethered stable coin, right? So for a swing trader, because you're playing the swings over weeks, you're strategically in and out of Tether, but on a weekly or daily time frame. So you could be in the middle of the night in Tether, wake up in a cold sweat thinking, oh man, I missed the low point, right? So if I go back to like the days here, right? Let's say you're a swing trader, okay? And you went to bed, here, right? Holding Bitcoin. Okay, so let me zoom in. So one day you go to bed here holding Bitcoin, thinking, oh, it's going up, I'm gonna go to bed tonight, and it might go up, and then boom, it just drops, while you were asleep. Well, no, that stinks. You don't want to be holding Bitcoin when it drops. Likewise, you don't want to go to bed here holding Tether, thinking, oh, phew, that was hell the last week. I'm going to keep my money in Tether, and then boom, it explodes on you one day while you're at work, or and you miss this whole thing because you're a swing trader. You're catching these lows and selling on these highs. So you don't want to be in either Tether or Bitcoin for any prolonged period of time. And I find that swing traders have the worst psychological states of mind, because they're constantly checking to see if there's going to be a turn in the volatility. And this could be on an hour or minutely basis. It could be on a daily basis. So you're always checking, and you're not comfortable in Tether. You're not comfortable in holding Bitcoin, because you're trying to play this volatility and strategically be in either. But when you're a day trader, it's a little different, because you don't care about the overall weekly volatility, right? You just don't give a damn. Okay, I gotta reset this. Where am I? Auto. Okay, there we go. You don't care about the overall volatility because you're playing minutely volatility. You're playing volatility by the minutes, right? So in this case, you're catching this volatility. So you catch like 10 of these in a day. You scalped your money. You scalped your 1% per trade, let's say, and then you go back into Tether and you go to bed that night. And if Bitcoin drops like crazy, or you missed a massive hourly candle, right? Tether or Bitcoin just skyrocketed while you were asleep. It doesn't matter. You're not playing a swing trade. You're not playing hourly, weekly, daily trades. You're playing minutely trades, and you're making hopefully between 5 and 10% per day. And over the long run, that disciplined strategy will make you more money. This is the hope we can achieve with this account today that we're setting up and we're gonna keep working toward. The hope is that you buy, so you make your money on this strategy. You go into Tether at night. You go to sleep. You can take a day off. You can take a weekend off. It doesn't matter. You're not looking to make money over the course of 3 days. You're looking to make money over the course of half hours, and you do 10 of them in a day, and you're done for the day, right? So it becomes like a job, a 9-to-5 job, not a lifestyle necessarily. And so that's why I like Tether being stable, because you hold it for a day, right? Now, if you're done, if you ever want to get out completely, you want to switch to a hodling mentality. Let's say you doubled your money, and you wanna get out. You want to take profits and take the $500 that we just purchased and withdraw $500. Fine, put that into Bitcoin, put that into cold storage, and now you're hodling effectively. You switch strategies here, okay? Or you go into fiat and you pay some bills. If you're not really making much of an income anyways, and your tax rate isn't going to be too high, and this is your sole income, as some people treat it as such, well then yeah, okay, pull it into fiat every week and pull $1,000 out and pay your bills. So it's a strategy and an interplay between different strategies. So right now, so I sold here, and now it's doing something crazy. So so let's concentrate back in here, because I don't know what the hell's going on, and this is crazy. It should be falling. Okay, so there are a number of signs here that show that it should be falling, and it might dip down again, so there might be a buying opportunity. But there's a few signals that we're going to watch in here, one of which is this Bollinger Band. Okay, this is what it's called, a Bollinger Band. This band is a calculation in traditional market analysis, or traditional TA, and it's simplified. It's been used for years, maybe developed in the 80s or whatever in traditional markets. And basically this band takes a look at previous action over here and decides that there's a potential at this very moment that it could go up further or it could fall. Okay, So it's saying within this range, anything can happen, and most likely that will happen. Okay, that's the potential that the currency can just, or that the action can just drop down to here. Okay, and there's a median in here. Okay, and then, or it could potentially go up. And sometimes, because it's taking a look at past performance, past action to determine what the potentiality is here on the next minute or two, it will suggest that it could go up. But sometimes where it kisses this line and it just keeps going, this past action actually pushes it higher, provokes it. It's telling us at this point, hey, based on this aggressive action, it could actually go up from here. Okay, so sometimes it'll actually break this, because this is just sort of an estimate of what it could do. And in this case, this band, this absolute, I guess you call like a lightsaber of a green wick here, really pushed past even expectations of this traditional analysis. For the most part, you can see the action tries to stay within the Bollinger Bands, but a lot of times it'll break it, right? Just about. This kind of break means something radical happened. Someone came in here that, not based on previous action, just made a wicked huge purchase and drove up the cost and just blasted out of the Bollinger Band. This is not normal, and you can't expect this to keep going. So here's where you see the potentiality, the potential of the price action to rise or fall. So we sold somewhere up here, right? And we can just take a look at our order history. We sold at 9.7, but the fact it was rising so fast, by the time my order got filled, it averaged at 9.870. So we sold somewhere around up here, 9.870, around there somewhere. So now we're kind of hovering where we sold, and it'd be great if this drops. Now the next indicator that we're looking at here is the stochastic RSI. So it's called the Stochastic Relative Strength Index, and we're looking at the relative strength of the purchasing power of all these people, right? And the books here, and we're seeing that it's dropping. Okay, so that basically saying that there's no strength here. Now you'll notice after more trading that when it drops like this, it should really drop as well here. So if you look at this drop, it's indicative of this drop. If you look at this drop, it's indicative of that drop. If you look at this drop, it's indicative of a rapid drop, and then it stayed down here in a depressed zone, where down here is where they call the selling is exhausted. Like there's so much selling going on that it doesn't look like it'll stay down here for long, and it has to rebound. So this is like a cyclical analysis of the momentum of buyers and sellers. Like the momentum right now is for the sellers, and there's a sell-off going on right now, right? And then at one point it'll be exhausted. Like most people got their sell orders in, and the price has been depressed, and then it'll be like a swing upwards for upward buying pressure, which will raise the price in theory. So whenever you see the price going up, you see the strength, the relative strength index also going up. And these two lines, the blue and the red that I've colored for contrasting purposes, indicate which is leading, right? So there's one that's an average, and there's one that's sort of like a leading indicator. And right now the leading indicator is below the average. So in this case, you're having a downward momentum. Whenever you have a cross, like here, you have a cross here, you had some issues going on here, but then another cross up. This whenever the blue line goes over the red line, now you have a strength leading upwards, and here's a potential cross happening here. So this could be a potential to go upwards, and we see the Bollinger Bands indicating it could go up. It could also go down, and you're seeing the potential to go up. Now, the Ivan who I've referred to before, who's sort of taught me this strategy, doesn't use the MACD. He uses just the stochastic RSI and the Bollinger Bands to make decisions on when to purchase. I found more often than not that this is not as successful as I'd like it to be, and I added this MACD indicator. This is a much more lagging indicator than the stochastic RSI, which was like really, it's like, what's going on down here, it's hard to see what's going on down here. Sort of right now the blue just crossed the red. Is like second by second, not even minute by minute, right? So now there's a blue cross happening, right? So this now it's moved, now the blue. So there's a good point to purchase. This might be a good point to purchase. I'm gonna say no, because we're already near like the top of the potential, and the MACD is near the top as well, and the MACD also oscillates. So when we're at this point, and if we look at the history of the MACD, you'll see it generally tends to oscillate. It can spend some time up here, right? And while the stock RSI goes up and down, the MACD can kind of linger up here. But generally speaking, you don't want to buy at the top of either of these two, because it indicates that it's going to go down. The momentum is going to go down. And if you look at this, the overall momentum went down as the MACD kind of went down, right? So there were minor fluctuations in the price, and the MACD also had minor fluctuations, but it kind of shows you a more general trend, while these mini trends, these micro trends, are indicating the stock RSI. So I don't think the stock RSI is a good enough indicator, because you have here a bottom, right? And you see all this buying pressure going up, but really it doesn't do much here. Like, this isn't worth it for me, right? Like, there's two drop-offs and a very mild tepid rise in price if I'm just going alone, if I'm using this as the indicator alone, right? So I don't want to buy here. See, it was at the bottom of the Bollinger Band, so the potential at that exact moment was higher than lower, so there's more potential to go up than go down, and this looks like a good buy signal, because we're crossing over from so there was a sell-off, and now there's going to be a buying momentum. But in the end, with that kind of a strong momentum, and that, and it didn't really materialize too much. It didn't even hit its maximum potential here. So because the MACD was kind of tapering off. So to me, if we go forward, this is not strong. And look, as we can see what happened. Look what happened with the stock RSI. It looked like it was going to surge up and kind of had second thoughts, right? The MACD is high. We've already had a strong run up. We can see from here. It's played itself out. And what is the momentum of these people? What is the psychology of these people? Well, these are analyses looking back at their past behavior and saying it's not likely that these people are going to keep pushing the price high. So you can see a drop off now. Now we could buy here because this is lower than what we've paid, marginally, but I would rather see that maybe drop off somewhere down to the 9,750 range. I want to see the MACD really come down. I want to see the stock RSI maybe fluctuate a few more times, then be at another low. So what I look for when I want to make a buy is I want to see not only a cross in the stock RSI, or I want to see the blue above the red. I also want to see it happen in the MACD. I want to see both these things happen in the MACD. So I'm going to put a little indicator here. I'm going to do a horizontal vertical line here. So I want to see, as a buying opportunity, a cross in the MACD. So that looks like it happened around here. Okay. I want to see a cross, or I want to see the blue above the red in the stock RSI. So I'm going to go click on this again and put it here again, right? And then let's see how that projects. Oh, well, it looks like that was a good buying opportunity. And we want to back test this strategy, which is hopefully what I've been doing over the last day or so, and I've been doing this during the last bull market and sideways market. This strategy does not work on a bear market, which I learned as well. That Ivan kid did not quite teach me that, but I ended up finding out that although I didn't lose money doing this strategy during a bear market, it was very impossible to gain money because your overall momentum is down, right? You're constantly in scenarios like this where your buying opportunities are incredibly difficult to time. The potential is very low, and if you get stuck in a crappy trade like this, thinking like it's going to go a bit higher, and then boom, you get stuck and just get dragged all the way down. So this strategy, anytime you're in a bear market, I don't advise this strategy. I think it's not effective. But once you're in a sideways market where over the day and over the week, Bitcoin is just, up and down and not really going anywhere, this is great. Perfect volatility, actually. And on a weekly, same thing. If it's not really doing much weekly, this is the time where this strategy works, where otherwise hodling doesn't work, or otherwise swing trading doesn't work. Day trading works, and in a bull market, it works as well too. You have much bigger rises and much shallower dips, and you just again, sell on the peaks and buy on the dips as it's just generally going up. You might even get lazy and just say, I'll leave it in there for a couple days and just the market will shoot up. Well, what's the point of doing all that work, doing all that day trading? But again, if you're good at day trading during a bull market, you have to be a little careful that you don't miss opportunities and you're actually, all your efforts amount to less profit than just letting it sit. But if you, again, are a little sharper on your time, you can actually have a multiplier. So whereas, the bull market demonstrated that, whatever cryptocurrency went up by 2 or 3x, let's say over a month, you might have even had a 2x on that 2 or 3x because of your day trading. So you're looking at maybe a 6x, whereas everyone else experienced a 2x over the period of a month. So I would say during a bull market, it is still harder, but in a tepid or a sideways market, this is the most effective way. And again, you get to sleep at night, right? So that's a buying opportunity. Now the MACD is falling, as I said, and the Starch RSI is having trouble down here. It doesn't have the momentum. It could spend some time down here because this was just a power wick. There are some people that are looking to make profits off of this. They might have bought down here and they're looking to sell up here, and then other people are reluctant to buy over here. So we might have a drop off in the price action here. So I'm going to wait till the MACD kind of like peters out and it returns with a cross. Now I hate how this is in my way. This shouldn't be here, but anyway, helps you navigate it. I don't want to see this. So remember I told you I have the subscription here to trade, not a free subscription to TradingView. Well, guess what? TradingView actually supplies the data. See, chart by TradingView supplies the data to Bitcoin, Binance. So anyways, they have this little navigator here that I don't really care for. What I could do, I could maybe move this above the volume. Let's see if I can move it above the volume, because I don't need the volume there, really. Let's see, what is it saying? Move down. Yeah, I don't want the volume here. Get out of here, volume. Yeah, there we go. So volume can be interfered with, and I get my MACD and my stock RSI right where I need it to be. So again, I'm going to look for the stock RSI to have a cross, the blue over the red, and I'm going to look for a blue over the red in the, MACD blue over the red and a stock RSI blue over the red. That's going to be my signal, and I'm going to look at the Bollinger Bands as well. I'm going to look at some past performance. So right now I'm not in a position where I want to buy, right? I'm fine, and I actually want it to drop off a little bit, to be honest, right? So I expect this momentum to come down. Realistically, I think it might not, because of this band, it might have actually put some optimism into these people here. So maybe a buying opportunity is down here. You know what I mean? Not too far off where we sold, right? I just don't want to buy back in way up here and actually have lost money, right? So that's kind of what being stuck in a trade is, where you sold here and then you expect it to go down and then whoops, it just takes off on you and you lose that money. But again, when you're day trading, it doesn't really matter. You're just playing these variances, right? That's all you're doing. So it doesn't really matter if BTC kind of took off, Bitcoin kind of took off, and then you sort of buy back in here, and then again you play the volatility and you just keep making what some people, when they make fun of day trading, they call it soup and sandwich money. You're only making like $5 a trade, that type of thing. Because look, I'm dealing with 500 Canadian dollars. If I do 1% trades, you're making $5 a trade, right? But if you make 10 of those a day, you're making $50 over the day. That's 10%, right? So, some people belittle day trading and just call it soup and sandwich money because that's exactly what it is, right? So let's wait and see what happens here. I want the MACD to come back down. I want the stock RSI to kind of cycle through again, maybe when it cycles through here. So what I'm going to do is I'm going to just use this tool that, I'm just going to check if Yusuf is still with us. Did I bore him to tears? He's still watching. Look at that. He's probably on the toilet with his earpiece. Okay. Anyways, this tool here, long position, is not available in the desktop version. I can't find it. So it looks like the desktop version is due for a good update to catch up with the web portal version. So for me, I like the layout better here. I can control it better. It's very clean, very crisp, right? Problem is, I don't have this long tool that I really want to use, right? It's got Fibonacci lines, which I don't use those. Those are, another form of tea leaf reading. It's got a whole bunch of stuff, but I really want to use this, and I'll tell you why. So when I go to the long position, okay, I'm going to place it. I'm just going to place it over here. Okay. So in the long position, this is my starting point. This is my ending point. I can move it around. Doesn't matter. And I want to set it to 0.5%. Right. So you can actually change it here too. You can just go in the settings here and say I want 0.5%, my stop level. So 0.5%. You're gonna have to do the math yourself. So you can just visually do it. It doesn't have a percentage adjuster here, right? So I'm just gonna visually do it. It's a bit quicker, right? So I'm gonna zoom in here, so it's a bit bigger. I get better control over it. Okay, oops, there we go. I'm gonna click on it. Come on. Oh, come on. Okay. So when you move it, you'll see 44% or 0.44%, 0.5%. So that's 0.5% to the downside. That's where I want to set my stop. And then I want this out of the way. I want a full percent to my upside. And one of the mistakes that I made in the past when doing this is that I would let it go above, like, so if let's say if I made a purchase right here, okay, boom. So when the price went higher than my 1% target, I would let it keep going. I would let it ride, as it were. And in doing so, the problem is you get greedy, right? And then it can take sudden twists and turns, and all of a sudden it can find itself right back down here, and you didn't actually get the profit you wanted. You didn't, the wick, one of these wicks here, these candle wicks, blasted right out of the target zone and then fell so quickly, like in these cases, this is in the minute, by the way, that you actually didn't get peak profit. So what you want to do is you want to put it where you bought in, quickly get this number. Where is it? Where's the number here? Where's the price? So that's your target price, 9872. Is that right? Let me just check that. That can't be right. 9872? 9868? Yeah, it is. So 9872, right? Well, it's fluctuating there. That can't be right. Target is 9872 and stop is 488. No, that's not right. That's not right. Something's not right there. So anyway, we go to the buy BTC. Okay, so right now I'm in Tether and I would want to buy. So you'd set it to 100%, get it ready, don't click that button, get it ready, and set your price for when you want to buy in, okay? Or you can just you can just grab this one, boom, and it grabs the actual current price that they're buying for right now, okay? So you just grab that, you just boom, boom, hit 100, so grab that price, hit 100, and then click buy. Okay, and then that'll buy it at whatever going price it's at. Or you pick a price. You say, look, what am I talking about? Here are the prices. Look, 9964. So if you have a 1% target from where you intend to buy in, so let's say here you're gonna buy in right here. Okay, so the price you're looking at is 9864. No, sorry, 9864. That's what it's showing you. 9874 is where we're currently at. That's the current price action. See, it's moving here. So you wanna, let's say, buy in at 9864. So you're gonna just set that price, right? 9864. Okay, 100% buy in, and just get ready to place that order, right? And when it hits 9864, you buy in, okay? And then it'll show up here as your orders. Okay, it'll be an open order. And then once you've bought BTC, okay, now this is a feature that other traditional trading sites, Binance doesn't, is you could set a stop and a take profit price. So you could say, look, once you're holding BTC and you're gonna look to sell BTC because you're gonna have it. Now you're gonna be, you're gonna have it. And you're gonna want to see the best opportunity to sell it. You could have set a take profit price and a stop price, and just let it ride, and just leave it, and then walk away from your desk for a little while. And if the bar just shoots past your target zone, it'll automatically trigger a sell. If it crashes past your stop, it'll automatically trigger a sell. Okay, Unfortunately, Binance has not developed that yet. A lot of people have requested it. Apparently it's coming, but right now you can only set one automated trade once you hold that amount of money. So I could now set this trade in. It would be over what the current price is, so I don't want to do that. But you could put in an order to buy BTC. Now, because it's over what the current going price is, that'll immediately sell. But if I set this lower than this price, right, like I want to pay less than what everyone else wants to pay right now, that'll just sit in the order log right here until the price drops and someone decides to take up my offer, right? So it's like haggling. And again, when I want to sell it, right, I want to sell it for a high price, and if the going price is that low, then no one wants to pay the high price. So it just sits there as an order, right? The problem with setting a high target sell price is that it could just crash on you. And then you want to sell it way up here and no one's taking your offer because it crashed. So where ideally you would want a target and a stop price, Binance does not allow that. It only allows one. So to be safe, you want to set the stop price. Okay, now we're seeing some action here. Let's get out of here for a second. Now look at this. The MACD is falling. Stock RSI is having trouble. It did not have a good pump over here. The sentiment was not very good, not very strong. I'm going to let the MACD continue going down. So I think the price will continue going down. Let me get rid of this garbage here. The MACD price, I think, is going to continue to fall. I do not want to make any purchases in now. And had I made a purchase then, it would have continued to fall and it would have hit my stop and it would have sold off, right? And I would have mitigated my losses. So I'm not comfortable buying in at this point at all. I don't want this thing around. So I'm just going to let this float around here, get ready for when I'm ready to use it, okay? And then I'm just going to zip in. So my MACD is still falling. My stock RSI could have, look, it really struggled in here, right? That was not a nice, clean, cyclical scenario like you see over here. This is nice and cyclical. This is not. This is kind of struggling in here. And I say this happened because some whale came in here and made a mega purchase, drove up the price in 1 minute, and people are a little flustered. They don't know what to do because that's not a typical sort of like mass behavior. It was an individual and it kind of threw everything off. So I'm seeing that a lot of people were kind of surprised by that. Now they're trying to take some profits, and we're struggling to get in a position where people want to buy. Right now, more people want to sell than buy. And so you can look at here the buy, this is the people that want to purchase, this is the people that want to sell, and kind of this is the two of them together where you see the difference. And you see there's a difference here, 9826, 9821, there's a $5 difference in what people are willing to pay. This is haggle territory right here. When these two numbers, 9829 and 9826, when they get really close, you're going to start to see a swing in momentum. It means the people who want to purchase, look, are very close to the people who want to sell. They're coming to an agreement in price. If that's the case, you might see a momentum swing, and then you see more people buying than selling. Okay, so MACD is low, stock RSI is low. This is in the sell-off territory. This means once we're under this band, this purple band, it means that generally here there's a lot of sell pressure, and it might actually be exhausted. Like there might be more sellers than buyers, and the momentum could turn the other way. In the middle is nice healthy territory. When you get to either side of these bands, it means there are other, the technical term they use is oversold conditions down here or overbought conditions. Okay, so this is like the manic and depressive phase of maybe typical buying and selling sentiment. Okay, and the MACD is a more sort of drawn out one. So you see on average, the overall momentum of this has kind of been lethargic, right? So that's what that is indicating. So again, I wait for the MACD cross, the stock RSI cross, nice potential to the upside within the Bollinger Bands, and that's a buying opportunity. So right now I haven't seen one. I saw a selling opportunity, and we're talking here maybe 20 minutes have passed in that period. So a typical trade opportunity I think comes along every half hour, every 40 minutes, and then the trade itself might last maybe 20 minutes to see, maybe even 5 minutes to just see it shoot up like this, right? So over the course of a day, to make 10 trades, you know, really could take you 5 to 10 hours. You know what I mean? Like, and that's why in a bear market, you can make 20 trades, took you all day long, and they were all pathetic little. They were not even super sandwich trades. They were like, you know, soup trades. You know, so donut trades. So in the end, you did 20 donut trades. You made $20 that day, right? Whereas in a bear market, your trades could just be so good on the upside. You make so many good trades that, you know, you made $50 that day, as a percentage of 500. Now if you're playing with $10,000 and you make 10% in a day, you made $1,000 that day. You should be quitting your job at that point. If you can consistently maintain that over months and months, and this strategy works for a year, geez, maybe you take a hiatus off work or something if you can make $1,000 a day and you're trading with $10,000 a day, right? Now, while we wait for this to kind of change here, I'll talk you through what my friend Faisal, who is now in our group. Let's just double check to see the channel. The channel is being watched by Yusuf still. Did he ask any new questions? Ali, did you transfer your BTC from Coinbase to Binance? Yes. Coinbase to Coinbase Pro, and then to Binance. There we go. Okay, so no other comments. Yusuf, I don't know if he's donated any money to my BTC public wallet here. Let's double check some other things. So I am streaming. That's continuing. That's nicely. You know what? I'm going to show you my face. No, I'm not going to show you my face. That's not going to be shown. You know what I'll do? Nothing. I'll just keep. I won't go into that. Well, I'll show you this. This is the software I'm using to stream, and now you see this infinite window going on here. And you can turn off. You can toggle various things like the image. I can toggle the image, and woo, there you go. This is the image I want to use because if you've seen Fight Club, this is where they've banded together, well, mostly Tyler Durden, has worked to destroy all the banks. And at the end of the day, he's blown them all up, and it's a brave new future. So that's the GIF theme. So anyways, if I want to block out what I'm doing for sensitivity reasons, I'll just use this image. So I can toggle that on and off. I can toggle the mic. I can toggle the whole display if I want to. I can toggle my front camera. Which I'm not showing you right now because you don't need to see. Actually, hold on a second. Let me show you. Front camera, there I am. Right. So if I leave this and I go back to the trading, you should see me trading with my little face in the corner over there. So and as I say, I'm just in my bedroom with my little setup here. So I'm going to toggle the front camera off. So that's the this one, yeah. So I have some little hotkeys set up as well that I can toggle it on and off. Okay, so we're back to the Binance trading, and the MACD is depressed. The stock RSI or Stoch RSI is depressed also, and we sold our BTC up here. We have now, if we buy now, right? You know, there's almost like a 1% difference there. So if this was the bottom, it'd be a great place to buy and then let it ride up, right? But I don't know if this is the bottom, so I want to make sure it's the bottom. So now there's a baby crying in the background. Please excuse, that's my new baby. Yusuf, you know my new baby. Faisal, welcome to my new baby crying in the background. So here's where that kid came up with this technique. And if we go to my little video, oh, that's my live channel. If we go to my little where's that kid? Let's go to that kid. I don't want to be in the studio. Just take me to my account. Just YouTube, man. Just YouTube. If we go to that little kid's, Ivan, little genius. If we go to his video where he taught this technique. Oh, where is he? I had him under finance. Where did he go? Ah, no, that's not him. Where's my man Ivan? Ah, there he is. If we go to Ivan, you will see a series of bands or lines, sorry, sloping lines that he draws, and this is part of his analysis. So it goes beyond just reading the stock RSI. And see these little lines he's drawn here? These little slopes? Let me see, let me find a better example. Okay, so let's pause this. So these lines and slopes he's drawn, he's trying to see when he believes the momentum will change, okay, from a sort of a downward swing. So he's not using the MACD as I have, and he's using the, oh, you know what, why don't I get this baby? No, well, the baby's getting annoying. But he's using the stock RSI, and he's using these as sort of other indicators of where he thinks the momentum will turn. Okay, now you got to be careful with this. You don't just sort of like set it and forget it. You kind of have to let me turn on the camera and I'll bring the baby. You kind of have to oh, you're coming back? Okay, change down. Uh-oh, what happened? Uh-oh, just a second, guys. Let me see if I oh, the video's not there. Okay, so this kind of changes, you know. You can't just set it and forget it, and then all of a sudden everything works out the way you'd like. You kind of have to play with this, and this is another problem with technical analysis. Everyone draws lines and redraws lines, and it's hard to tell if they're being honest, with themselves, because if you draw a predictive line and then it doesn't really come out to what you've predicted, you know, do you change the line? Do you show everybody, you know, in you know, who's looking back in your TA that, you know, oops, you were wrong, it did not follow the path of the line that you set? And they'll give you all these caveats that this is just what's the word we're looking for here? It's a possibility, like 70, probability, like it's a 30% probability to the downside, it's a 70% probability to the upside. So because of all that, you find a lot of people, they change their graphs and lines to make it look like they were right. So there's a little bit of that, but at the same time, you will have to change the line. So I'll give you an example, okay? So if we pick a new line to draw, a trend line, and we go, and this is the technique, you connect the tops of a downward trend, okay? So see that trend now we're seeing happen? So he's not using the MACD, all right? If we go to him here, he's not using the MACD. He's using the stock RSI. He doesn't really address the volume much. And then he uses these trend lines to try and pick these moments to buy back in. And he's using the Bollinger Bands, as you can see. In my case, so I'm going to draw this trend line. And his advice is when the median line, this yellow line, the median of the Bollinger Bands, crosses over your trend line. Now this is where you have to draw it, right? So you got to say, hey, look, do I draw it from here? Do I draw, when was the beginning of this downward trend, right? When the momentum crosses over, this is a good sign to indicate that it's a good time to buy. Okay, it's a good time to buy. So, and there's enough reasonable confidence that it's crossed over this line, and we're heading up. So you're gonna see some upward momentum. So you see this green candle wick coming up, and the wick itself has crossed this line. Well, you don't know if it's gonna turn around and continue down on a trend, right? So you gotta really wait until the median crosses over your path. Okay, so you see how it's gone down again? So that would be another top that I would be connecting, right? So you really got to wait until the median itself goes back up over, and again, not the candle wick, the median. So you might see several wicks pushing the top of the Bollinger Band. Okay? When that happens, your median will also rise, and you're now in comfortable, affirmative territory. And again, if we look here, we see the stock RSI has now demonstrated that there's people are looking to buy. Okay, there's more buying pressure, and the MACD just crossed. So if we go into our vertical line here, I would say, you know what, that looks like a good buying opportunity. I'm going to put a thing here, and I'm going to put a thing here. This looks like a good chance, but the median hasn't crossed over yet. This could still turn. This could still turn, and it just has. So let's be careful here. Let's wait until, you know, our friend Ivan's advice comes through, and we're not going to buy yet. So what I'm going to do is I'm going to get ready with my presets here, my 1% gain, my 0.5% stop, and I'm going to get ready to move this in, click on whatever price it's currently selling for, 100% buy, and then we'll see what price we bought, and then set my stops accordingly. Okay, my stop accordingly, because I don't want to lose more than 0.5%, right? So we're in. So the MACD has crossed the blue over the red. This is where I said I want to have that visual acuity. I want to really see what's going on. So the MACD has crossed. We see the blue above the red in the stock, but the pressure yet hasn't really crossed my trend. So let's just wait a little bit. We're close. We're close. So we see a good buy setup coming. And what would happen is I would put it in here like, oh, what's going on here? What's going on here? Not yet. Not yet. So I would say that potentially in 2 to 3 minutes, we might be in a scenario here where I could be looking to buy, where that line. Now don't confuse it with this line. This is a like a 200 moving minute average. In fact, I should probably change the color on that. So my moving average 200 is the yellow. So my 50-minute moving average is that one. I'm just going to turn that off. I don't want to see that. Okay. And then the orange line is an average. I don't really want to deal with those, so I'm gonna turn that off as well. Okay. So and the 20, I don't need the 20 also. The 20 is actually the median of the Bollinger Band. You see? So when I turn that back on, so we'll just use the red as the Bollinger Band. So the median of the Bollinger Band is a 20-minute average. So it looks at the last 20 minutes and averages out what the movement was. So you can see it lags behind the actual movement. It's an average. Okay. So right now I'm still waiting. So right now I've just connected tops. You see how it's gone down again? Good. My boy Ivan didn't steer me wrong here. That you really need that median, which is the last 20-minute average, to go above your little line that you draw. Now this line actually moves along with you, so sometimes you have to readjust it. You have to like move it back, right? So I've connected the tops, and I'm waiting for the median to shoot above here. That could be a green wick that just blasts past and then starts tickling the top of the Bollinger Bands and starts going up. Okay, so that's a good buy-in point, right? So I would say that could happen potentially around here. Could happen around there. And that would make the price at 9848, right? And it would make my upper target at 9947. That's when I want to sell, and it would make my stop at 9799. So I would take that number, and I would immediately after confirming the order, and now I'm holding BTC, I would put in a stop here. I would put in another order to sell if it drops below that. So what's the theory behind that? Okay, so this is the theory that Faisal. Oh, here we've got a green wick coming. The theory that Faisal taught me, and it's in line with what Ivan taught me, but Ivan took the particulars from the penny stock trading world and brought it into the crypto world, and here's where Faisal's teachings come in as well. So here we go. The MACD, the stock's having a little trouble up there, but the MACD is looking good. So this could happen shortly. Now again, if we look closely, I want to zoom in a bit. If we look closely, we're starting to see the two lines starting to converge. I'm going to say this could be where it could happen, out here. So Faisal's theory goes, well, not just Faisal, but the whole scalping technique goes that if you can get 1% gains per trade, the soup and sandwich method, and you do that 10 to 20 times a day, 10 times a day, let's say they're all winners, you made 10% that day. But you got to be careful because there are some losers. This isn't the, you're trying to predict, but you could lose, right? It could go the other way. You could just get it wrong because you're crap at doing it. So in doing so, you need to set a stop. Okay? So you set your stop at half of what your gains, what your target is. So if you're right, every time you're right, it should be 1% gains, and every time you're wrong, it should be 0.5% losses. So if you made 4 successful trades and you made 4% gains, but you made two incorrect trades and you lost twice, you made 4% gains and 1% losses, 0.5% each, so 1% losses. So in total, you make 3% gains. Over 6 trades, you made 3% gains. Again, if you make 20 trades in total, 14 of them are wins, successful trades. So you made 14 successful trades. That means 6 trades were unsuccessful. Each one stopped at 0.5%. Excuse me. This is basic math, but I'm going to do it anyways. Times 0.5%. You made a loss of 3%. Again, you made 14% because you were successful 14 out of 20 times, and you were unsuccessful 6 times. So you made 14% minus the 3% unsuccessful trades. You made 11%. So 20 trades, 14 successful, 6 unsuccessful. You made 11%. That's going to take you all day, and you're factoring in your own ineptitude. So at this point here, we see the MACD has crossed, it's coming up, the stock RSI is hanging out up there, and we see the median about to cross over, and we want to, ideally we want to see it push up the Bollinger Bands, and then we're good to go, right? So if we move backward a little bit, we sold our up here, and this is a good time to buy in. It's it's obviously less than when we sold, right? So I'm gonna say still I'm looking around here, and this would be a good time, maybe, yeah, like there. Okay, so you're constantly adjusting, you're tweaking a little bit, you're trying to set your predictive trend lines. It looks good. So this is the ideal setup. That we're looking for. We're just looking for this to cross over. The MACD is not, the stock RSI might come down a bit, but if the MACD overall is still pushing up, the stock RSI can go up and down a few cycles, but overall our momentum might take us up. So that would be an ideal trade. Now yesterday, I'd be much more confident to do this because I didn't have money on the line, but today I have money on the line, so I'm a little bit nervous. So let's see what happens here. Let's see how this plays out. Again, if it goes wrong, we want our stop to catch us and make sure our loss is minimal, right? And again, we want to have more successful trades, and we want to have our successful trades be 1% gains. So let's see where we're at. Let's see. We're getting close. I'd like to see a bit of a surge. So again, this is we're at the top of these little cycles. So this little cycle here took us up like that, right? This little cycle did next to nothing. This little cycle did a little push like that, right? So we're due for a little dip because we were at what they call overbought conditions. Okay, so it was overbought, and now we're gonna kind of cycle back down, and then it could be the next best buying opportunity is when we're coming up again from here, and the MACD in general is gonna start, lethargically, lazy river style, going up. That might be the best condition. So maybe I'll push this out a little bit, my expectations out to here somewhere. Okay, now I would start saying at this point, maybe I need to adjust my line a little bit more, right? Because this is now crossed back over. So this is where the tea leaf reading starts to become in that dangerous territory between self-fulfilling maybe, or just covering up mispredictions. So I've readjusted that to connect the tops here because we've clearly had a bit of a top. So I'm connecting them all. So now I want to see the median cross over that again. That's what I want to see. The Bollinger Bands are narrowing. Whenever the Bollinger Bands narrow, whenever the Bollinger Bands narrow, what's important to see is that they generally tend to have an explosive reaction. So they can be in here for a little while, but whenever they narrow, something happens, right? This is not where it likes to be. tends to be a behavioral characteristic of the traders. So this is basically everyone's kind of getting into like an agreement, a haggling agreement. If you come into a scenario where over the whole day, you really examine what's been going on in the whole day, and there's none of these breakouts to the top or bottom, it's just narrow activity all the way across, this is not a good day trading day. Don't even bother. Like, you want to see pinch points and expansions of the Bollinger Band, and then pinch points, and then expansions and pinch points. That talks about volatility and potential volatility. You want to see a good sort of rhythmic pattern here in the stock RSI. You want to see a good rhythm in the MACD. Overall, you don't want to see a narrow Bollinger Band range right across the board, an erratic stock RSI rhythm, or an erratic MACD rhythm. Okay, that's not what you want to see. And note, the MACD can go lower. The MACD went very high in this case, so we're in the middle territory. So you got to be a little careful here. You're not down low coming up, right? So up. So we see the stock RSI dropping. The MACD is kind of in the middle. We haven't reached a good buying opportunity yet, right? So that's what we're doing here. So let's zoom in and just prepare ourselves. So we've connected the trend. Maybe it'll go down a little bit more and come up a little bit later, which is fine. Again, we sold up here. I'm perfectly happy to wait. We sold our BTC up here, and we're just wait. If it falls more, great. You know what I mean? Then I bought in and I've gained BTC on my position, right? Now, in terms of money, it would be equal because I'm in Tether right now. So I sold up here and I've been holding on to a stable coin, right? This is why I don't want to trade in pairs like Ethereum to BTC, because neither of them are stable. So you could have a graph like this, and I'll come back to this graph here. Actually, no, it's not yet. We can look at Ethereum to Bitcoin or a trading pair, and we'll see a very similar graph, right? Just takes a second to load. But the problem is, right? So this is Ethereum to BTC. Okay, great. So let's say I held Ethereum or BTC up here, and I sold it and at a peak. And now I held Ethereum through this whole period. Okay, so this BTC crashed in price. Now this is a crash in price or a dip relative to Ethereum. So this could mean two things. This could mean that Ethereum held relatively steady and Bitcoin fell, or it could mean Bitcoin held steady and Ethereum rose dramatically, because none of them are stable. It's relative to each other. It's like a Mario Brothers game, and there's two platforms moving, and you're jumping from one to the other, and they're both moving up and down. So you could be on one and jump to the other, and overall they're both low. You could be, you ever see those Mario Brothers games where one platform is moving up and down, the other one's moving up and down, and they're out of sync. So you have to wait till the two patterns combine or something or sync up. Well, yeah, you could be in a scenario where they're both low and you've jumped from one platform to the other. Relatively speaking, they were moving differently to one another, but in the grand scheme of things, you're low on the screen, whereas if you waited a few seconds later, they might both be high on the screen, and then you're jumping from one platform to the other, and they're both high. So because of this, it makes no sense to be trading between Ethereum and Bitcoin. To me, they're relative. What makes more sense to be trading is Bitcoin to US dollar. Now there is some fluctuation in the US dollar tether. Obviously, the US dollar goes up and down over the day, but in fractions of pennies, it's relatively stable. So, whoa, look what happened there. Massive spike. Someone just came in and bought for no good reason, bought higher than what everyone was asking. Could be a good buying opportunity. Let's see what happens. So let's bring it back in. Now we see the median, the Bollinger Band median, about to cross. We've connected all our tops. If I bought in here, it would be lower than what I sold for. This could be a good opportunity. Let's see. The MACD is low. Not crazy low, but it's low, and it could be crossing. Okay. All right. pushing the Bollinger, I think it might be good to buy here. Let's do this. So we're gonna grab that price, lock in for 100%, and no, you know what? No, I'm gonna hold off. Ah, now it's crossed. All types of crossing going on. So I'm gonna jump in here for a purchase. So I'm gonna look here. I'm gonna grab that price, 100% in, buy BTC. Boom, my order's in. Now, was it too low? 9874. We're already above that. Crap. Let's grab whatever. Cancel that order. Grab something. 100% buy. Grab that price. 100% buy. 100%, man. Oh, my order went through. Oh, so I have BTC now. Okay, great. So I bought my BTC at 983. Okay, so it was 9893. So that's roughly here. Let's say 9893. Let's move that up. 9893. Whoa, that's where I bought in. Somewhere around there. So let's set my stop here at 9845. Okay, so that's my stop is 9845. 9845. That's fine, and we'll do 100%. So if we hit the 9845 price, let me be careful here. That's too low. What am I doing? I gotta be careful here. I don't want to put that in. Oh, stop. Here we go. I want to put a stop. So 9845. Okay, I don't need a limit because once it sells, I just want to get rid of it. So 9845, that's my stop. Okay, so I'm gonna set that there. So let's do that. Let's make sure I know what I'm doing here because this is my first time using a stop. Okay, so let's I hope it just, I don't want to see, it's 9845 and right now that's the going price. So you don't want to actually put in a real sell order, right? You don't want to put in an actual sell order because someone will buy it. It's obviously lower than what it's going for. So you want to put in a stop, right? Which means when it gets that price, it should trigger a sale. So let's do that. Let's hope it doesn't. If the last price drops to or below 9845 USD, an order to sell at price of 0 USD will be placed. Sorry, let's make sure that's... Why is it 0 USD? Why is that wrong? Okay, I'm gonna be careful here because I might actually sell it if we hit this. If we hit my stop, I might actually sell it myself. So this is me kind of experimenting here. So 9845 is the stop. My limit, I don't have a limit. I'm gonna sell that amount of BTC at that price, and it will be 100% of my BTC. So why would it be a total of that many US dollar tethers? I don't quite get that. What if I change that to 100? What does that mean? So I hold. That order was filled. I have BTC, right? Yeah. What is happening here? So my MACD is above. My stock is fluctuating a little bit. I'm in territory here. I'm in lost territory right now, hoping it can turn around because it looks like the momentum's there to turn around, but this might be a bad trade. So let's see how it goes. If it hits that, I should really sell. So let me get this ready to sell right here, just in case we get that limit. I might just pull the trigger myself. Yeah, you see here it says 370. This is what I wanted to show. So if this is the price I want, yeah, I wanted to show that even my stop limit here, not that zero business it was saying. So look, we're having some difficulty. Maybe the stock Stock RSI will turn around and we'll move upwards. I'm hoping. Everything, the criteria was met. If we go back and look at the criteria that I was basing this on, it was back here that I bought. So that I bought BTC. So the MACD was over. The stock RSI was over, although it was an overbought territory, and all my conditions were met. Now the question here is, will this be a bad trade that I just couldn't predict, right? Everything was met. So let's see how this goes. Yesterday I had a couple of these, so let's see what happens here. So we're in a trade. This is, I guess, where it becomes most anxious. You don't want to walk away, because again, if you set your stop, right, you know, that could be automated where that sells once it crosses, but because you can't set your take profit and your stop, you want to be around. You want to stick around for when it crosses over your take profit, and then you sell, right, and then you make a profit. So I just want to make sure that my stop limit is set properly. So I should really have this many. So I'm just going to copy this just to be sure. I'm going to copy that. Go to my stop limit. 9845 is where I want to sell in a panic, right? I want to sell all my BTC at that point in time, and I want it to sell for this much. So why isn't it showing that? So why isn't it showing? What is happening here? Is there something I'm missing? That's how much BTC or US dollars I should get if I sell at that point in time. So the MACD is fine. Stock RSI looking like it's going to turn around. So it looks like I might get some momentum upwards. Now, let's see what it says here. Let's read. The stop limit order is an order to buy or sell a coin once the price reaches a specified price. Okay, let's read more. The lowest ask price, and the price of BTC will be placed. Okay. So that's fine. So why was it giving me that weird figure? The last trade price of BTC and the resistance, if you think the price will go higher, then stop limit order, then specify the stop price to be there and the limit price. So ideally, you want to have a stop limit, so it'll start selling off. This is in the case where, like a knife, it's like a falling knife where the price is dropping too rapidly, and it'll start selling off. That's your stop. And then the limit, where you say, look, it's not even worth selling it past a certain point. The losses are going to be too big. So you set a range. Between that range, you should sell. Once it exceeds that range, stop selling, right? So let's go back here. We're kind of languishing here. I'm hoping the momentum can turn. This is a pretty pathetic rally, and I'm hoping the MACD doesn't turn around on me, but the stock RSI is having trouble. So this could be a bad trade. It doesn't look like it's strong, to be honest. So I'm gonna try and get this stop limit business set up here. So let's get rid of that, and let's put this much here. No, it's not letting me. 9845.33. Okay. Do I need a limit? Let's try the same limit. Let's see what happens if I do the exact same. No, let's do. Maybe I need to put a limit in. 9745. Okay, so it'll keep selling effectively until the order is. Ah, there we go. Okay. So that works out. So you see here, without putting a limit, it doesn't know what to calculate. So I'm just going to put any limit, 9745. So basically, that between this range, between 9845, if the price keeps falling, and 9745, you've instructed this automated trade to continue selling. So if you fall below that, just sell, and then if it gets to 9745, stop selling. You know, that's enough now. So basically, it's saying within this range, you know, this is the total US dollars that you'll have. So it should be 377. So if I make this higher, the problem is if you make it too close, like if you make it 98, for example, 40, yeah, you'll have more US tether. But the problem is if it falls so fast that your order isn't fulfilled, then you'll only have a partial fill and you'll be holding on to BTC, right? So essentially what I want to do is not have it such that if it's falling so fast I don't sell my BTC, right? So I'm gonna have 9745. Now the beauty is my order is so tiny and these books are so big, I doubt, and like look, these are people selling 509 Bitcoin. I'm selling 0.03 of a Bitcoin. My order will be filled instantaneously. But just in case, I'm gonna just make a wide spread here so it has all this time to fulfill the order. So I'll go ahead and put that through. Okay, so that'll trigger it. If the last price drops to or below 9845 US dollar tether, an order to sell this much Bitcoin at a price of, no, I don't want 9745. No, forget that. No. Excuse me, cancel that. Let's make sure that's the exact same price, 9845.33. That's what I want to sell it for at that price, at that time. Okay, 100%. Boom, sell. If the last price, place order. You know what? It just went through my stop. It just went through my stop, and it was filled. See that? So we just blasted through my stop. I just put the order through. And now if we look at what I'm holding, it'll tell you I'm holding tether. Okay, so essentially, just luckily on the order history, 9845 was totally, it just happened to be totally fulfilled. We sold for 9845, it triggered, we sold. So basically our stop loss worked. That was luck that I hit it at that exact same time. Ideally, I would have liked to have understood what the hell I was doing and had that sorted out in advance. But just so happened as we crossed, and this was not a good buying opportunity apparently, I lost 0.5%. So it went through. Okay, so that's what a stop is, right? So now we want to look at when the next opportunity to buy is going to be. I have no open orders. My order history is here. I had, you can see what happened. I bought for 9893, and then I sold for 9845. I took a 0.5% loss, and you can see the amount of money you have in US dollars and how I've lost. So you see here, I came in with 973. I bought at 972, so I made a little money, but I sold at 370. Sorry. So overall today, I've now lost $3 or $2.50. Right? That's that's not good. We want to make more of these purchases. But look what happened. Look at this. You don't want to hang on thinking that you're the best trader in the world, right? So that's the point of the stop loss. Look at it. It's crashing. Absolutely dramatic crash all of a sudden. So that would have been a whole % lost. So that's the point of the stop loss. Don't let your ego get in the way. Don't think, I'm just going to hold on a little bit longer and it's going to correct and go up. And you see the MACD movement upward, the stock RSI movement upward didn't really do that much, right? And you got to be careful to think, look, hey, you're not going to time every bottom and buy here and sell here. By the time you confirm that it's going to be a good movement, you're buying here and you want it to go up there. In this case, look at this. Pandemonium. Something's going on. Massive sell-off, right? So I took a small loss here. But what if I buy back down there, right? I buy back at another low. And then we see it, come up. So right now, I sold here when I came into the game, right? And then I bought here, so I really didn't make much money on that. And then I sold here, I took a little loss, and then now it dropped. So if it continues to drop, maybe buying in down here and riding some momentum upwards, make more money, right? So this is the nature of trading. So what I want to do is I want to be honest with this, and I want to say, guys, look, as a record for all of us trading, right, or learning, I'm kind of like using this as a tutorial. I want to be honest with the trades and say, you know, this was an unsuccessful trade right now, right? And so what I'll do is I will close this up as a record and say, well, here's where I sold. You can tell where I kind of exited, right? So it's a little hard to see, a little jumbled up, but there's where I exited. Okay, so this was, I'm going to use this as a record of how to show how the trades went. I can screenshot this and post it up. So look, here's something's, but look, here's the median, right? There's some action going on. You don't know what's going on. It's pressing, it's really pushing on the bottom of the Bollinger Bands. This doesn't look good. Your stock RSI is falling. Your MACD, there's a huge discrepancy between the average and where the selling pressure is. Again, a huge gap here as well. This is not a good buying moment. This could crash actually quite substantially. So what I'm going to do is I'm just going to let this play out. This might take 20 minutes to play out actually. So I'm gonna wrap it up here. I think what I wanted to show with this, maybe I'll wrap it up in the next 5 minutes. What I wanted to show here is how the intricacies of the sale, or the okay, come on, why is it giving me trouble now? Yes. Okay. So the intricacies and nuances of how to make a purchase, how to use the Binance, how to understand the interface here, and how to understand the Bollinger Bands, the MACD, the Bollinger Bands here, the MACD, the Stark RSI, your orders here, your order history, what you're currently sitting. Again, I'm holding US Tether right now, $372. I don't know why it says available balance only 370, but anyways, the tools that I've used, this for example, I don't like this color, I'm going to change it to yellow, right? So how to use these tools, how to set it up so that you can use a keen eye to see these nuances and differences. So anyways, that's that. What I can then do here, and this is how I'll treat it. So you don't have to follow these live trading sessions. But let's say I'm going to have a live trading session. I'm going to take the whole day to do it. And if anyone wants to watch the fine minutia, they can sort of skip through whenever they see these are the things you want to be here for. When I've decided to make a purchase or a buy, and when I've exited the trade, you want to see more cases where I enter the trade here and I exit out the top of this little target that I have, right? In this case, look, we spared ourselves for some carnage, and that's the discipline. The discipline is to make more good trades than bad, and catch yourself from hitting this kind of scenario. And what I'll do going forward is I'll take a screenshot of this kind of situation. So I'm going to use this snipping tool in Microsoft here, and I'll use the tool and I'll say, look, I'm going to capture the date, the time, the Bollinger Bands, my green lines there indicating where I thought those would be good times for purchase. They're my own little markers. You don't need to see all this stuff here, but if I just capture this amount of the screen here, it's a good amount of information, right? And so now in this feature, use the pen, and I can say, circle this, right? So let me just go back here. That's not a win, that's a loss. So let me erase that and use my red color, right? And say here, stopped out, right? Okay, and this is where I bought in, right? Didn't really work. This is where I thought would be a good purchase point. Right? That's what I'm looking for. I'm looking for this kind of information here. So now when I post that into the group, you'll kind of see the trades I've made, right? So you don't have to watch my my video and spend the whole day, but you'll see this. So now I just copy, I go to the Slack group, and if I go to a trade account, so here's my live stream, and here is first live trade, let's say, and we'll say wah 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 unsuccessful, right? And we'll just post that there, upload, and there you go. So you can take a hike, and just over the course of the day I'll post a series of these trades, and we'll see with real money how many good trades I can make. Like yesterday, like if we go up to yesterday's progress, this was all paper trading. There's no money involved, right? I was just sort of setting up these scenarios. I was I was pretending like these were purchases, right? And like that would have been a stop out because I got that one wrong, right? And then over here, where the stop out continued to crash, but then later, after that crash, I found another buy-in point. So like if we can zoom into this, so yesterday's scenario where there was a crash here, and then I thought, oh, that's a good buying opportunity. So I lined up all the beneficial, or sorry, the let's say the indicators, right? The buy signals, they look good. I bought, and then here I've displayed to you, in honest good faith, this is where I would have purchased, and then we see, whoa, look what it did. All right, and then that's where I would have made profit, right? That's where I would have sold. But in reality, you see the intricacies of setting up the prices, getting it all right, picking the right price, 100%, buy, sell, da-da-da. It's quite, finicky, right? So maybe you don't time it right. Maybe you don't get, 1% exactly. There's little issues there that once played out in real time with real money. Again, here was a buying opportunity. I posted a little after I thought I would have made a purchase in this sort of paper trade, and then, oops, it got stopped out, right? There's another buying opportunity, new setup, okay? Looks like good indicators, and then, boom, it made money. So I would have sold here, right? And I'm declaring it a 1% gain. But what if my timing wasn't right? What if I didn't click the button fast enough, and so forth? So now we're trading with real money, and in this case, at the end of the day, we won't have my little notes here that say, oh yeah, 6% in 9 hours. That's quite optimistic. What you'll see is the buy orders, right? You'll just see right here in the order history where I started, beginning of the day with this much money. At the end of the day, how much money? Did I make money or not? Right? So right now you can clearly see, started with 373, down to 370, right? You want to see if I had a good day where I've successfully made, let's say 5%, or let's say 6%, right? So you want to see 373 times 1.06. So at the end of a trading day, you want to see that 373 up here. After all my orders, you want to see it in 395 territory. And then what I'll do is I'll sell to, I'll buy US dollar Tether, call it a day, go to bed, and do this whole thing the next day with Tether to BTC. So again, you see this sell-off, our stop loss really helped us out, right? I'm not involved in this carnage. And what I would do at this point, I'm just gonna tuck this little line away, okay? And we'll start a new trend line, and we'll see how that plays out. Right, so this is not like for me, because I'm in Tether right now. Like, look, you could go to the mall, you can do whatever you want, go have a shower. You're in Tether, you're in a stable coin, so there's nothing. Excuse me. This isn't like you're in Ethereum, and Ethereum itself is volatile, and you don't want to look the other way. You're in Tether, so you essentially can go take a walk, knowing you're effectively holding dollars, really. So at this point, you want to go out with the family, you want to go to lunch. The worst that's going to happen is you miss some trading opportunities, right? You miss maybe a rally and Bitcoin goes up, and you missed like a 1% gain. And as you can see, look, these are minutes. So all this happened over the course of this video. How long did it take, man? We've been running a video now for
4 hours.
4 hours? 2 hours and 30 minutes. So over 2 hours and 30 minutes, realistically, there's only been a couple trading opportunities, and only one that I pulled the trigger on, right? So I would say look, if you've had enough for the day, if this is not really a good trading day, you got things to do, go do them, right? Or look at this, I'm setting up for the next trading opportunity. Let's see when that's coming. That could be maybe 20 minutes away. So go take a walk. By the time this, you know, and this is an interesting scenario where the median is already above this line, right? So I'd say this is a good half hour away before anything interesting happens, anything worth buying into happens. So I would most likely venture to guess that the line will end up somewhere like this. There's going to be a couple bounces along this line or something like that, and then it'll uptick again later. So I'm okay to walk away, take a shower, you know, do whatever, something else, you know, go play with the kids. And now, you know, you set this up, you can come back and take a look at it. So this whole video was for the purpose of, you know, using these tools, understanding what I'm doing here, and then when I do take screenshots and upload it to the team here, or the group, that the group can understand what I'm demonstrating here. So in this trade account channel, this is what I'm going to do. We're just going to follow this account and see how I can develop this, and hopefully over a 2-week period of time double my money. You know, that's the plan. If I'm doing 5% a day, it takes about 14 days to double your money. So if I have time off with the baby, and I'm working part-time right now, so I'm gonna see if over the next 2 to 3 weeks I can surely double my money 2 times, right? So we get 500 to 1,000, 1,000 to 2,000. If that can be demonstrated, you know, that's amazing. We have a winning strategy. So that's the point. If anyone else wants to try it, fine. You know how to do it. It took me a long time to be comfortable doing this, and I sort of abandoned this during the bear market, and I'm picking up again only because, in general, if we look again to this scenario here, we're looking to see we're no longer in a bear market. You know, day trading in this kind of environment is crazy, right? Like these swings, you know, they're days. This is like a week here, right? So you might have a good week day trading, and then you just, you know, you eat it for another 2 weeks. So I don't think I was good enough to day trade in this environment. It was just constantly losing, and it wasn't for me, right? I'm not good enough to trade in that environment. Also, in a bear market, most people are short selling, and that's something else that I just, maybe I'm not good enough to get into, but ethically I have issues with short selling as well. So bear market, people short sell. For me, I just took a break, watched the market, studied, bought on dips, you know, bought on a few dips here, and I have a hodling strategy. So what I'm doing here is in conjunction with a hodling strategy. So you have a portion of my money that's invested in a long-term approach, and then this is, you know, a very small portion of my money that's in day trading, that we're experimenting with here. And that as well psychologically helps me, because, you know, where in day trading you're panicking because you think you missed this trend, right? You're doing your soup and sandwich trades, and you miss this massive trend. Like you're looking from 7,500 to, you know, 13,000. That's a 2x right there, right? That's a 2x in, we're talking June 9th to June 26th. So in less than a 2-week period, there's your 2x. That's all your day trading efforts just by doing nothing. If you manage to buy this bottom and you manage to sell this top, you know, as a swing trader, you did one trade and you made up for all the efforts of a day trader over a 2-week period of time. However, if a day trader is doing well, they could maybe even 4x during this period, not just 2x. Right? Alternatively, if you're not doing well, you took some time off, as a day trader, you might be psychologically bothered with the idea that all this is happening while maybe you're not making that much money, for example, or you're wasting so much time in your day trades, and you know, peace of mind would have been just doing nothing and still making the same amount of money. And you switch strategies. You go from a day trade to a swing trade. You change to a hodler. Like you're inconsistent in your approach. And in doing so, psychologically, you wreck yourself, as they say. So, what the better approach is to say, look, if you want to hodl, put a portion of your money in hodling. Put a portion of your money in gold or I don't know, railroads and oil and whatever. And then don't day trade with all your money, and don't necessarily hodl with all your money. So psychologically, you're like, yeah, no problem. If overall the trend is going up, okay, I'm making money. For me, swing trading, I don't even bother with, right? For me, it's like a day trading and a hodling, and that suits my I guess my schedule. It suits my life. It suits my mentality. The two of them work well, whereas swing trading doesn't work for me. Like that, I've recommended here in the tools, links, and tips. I've recommended where is it here? Crypto Kirby. This guy is a swing trader. He constantly makes fun of day trading. He calls it soup and sandwich. That's his line I took from him. He belittles it. He's a swing trader, right? The Moon is also a swing trader. Ivan on Tech is more technical. But anyway, these two guys are swing traders. Following them for the last 6 months to a year. More actually, that's not for me. It doesn't work for me. They do it full time. And I've tried to look at some swings and predict them, and I can't. I'm more wrong than right when it comes to swing trading and following TA and fundamentals. So for me, day trading has no fundamentals whatsoever. You're not looking at the news in the morning to understand if there's going to be a potential swing. And in terms of TA, it's very simple TA, very simple. It's not looking at pennants and reverse head and shoulders and bull flags and bear flags and all types of this, what they call classical technical analysis patterns based on some sort of almanac of past, proven outcomes or predictability. No, it's quite simple, and it's just repeat, rinse and repeat, and you just want to get more right than wrong, and it requires some skill to get the timing and your dexterity correct when it comes to things like timing your buys and sells and so forth. Now, ideally, if Binance and maybe in the future have a target and a stop loss option together, you can set them both. That would be ideal, and then you can just sort of set it and forget it. Once you buy in, you set up your setup here, and then you plug in your values and you walk away. And if it drops, okay, you stopped your loss. If it gains, great, you took profit. So you could even have you don't have to watch it so intently. But right now, unfortunately, you have to watch it a little intently to make sure you cash out. Also, if you see it kind of weakening up here, maybe you want to take a profit, at 0.8% rather than a full percent. If it looks weak to you, hey, take your profit and get out, right? And this is about that level of discipline that hopefully I hope to develop. So as we can see here, that projection line that I drew, I'm just gonna adjust it again to nick the tops here, and you can see it's more in line with that moving average. The average is a little above that line, but I predict it's gonna even come down below it, right? And again, your next setup is probably 15 minutes away. It doesn't look like it's too close, actually. Well, the MACD is low, and it could be, I think it just crossed. So maybe it could do something up here, right? So this could be an opportunity as well. Again, we sold here. If we buy down here, it's not too bad, providing it doesn't just continue to crash, right? If it goes up and we make, and that's where we make our profits, right? So I'll end the stream at this point. I think I've shown you all the things you need to see and how you can follow along. And I can stop streaming, or I'm going to use my little... let me just see if Yusuf said anything. He has one last question before we sign off. What's he saying? Oh man, there's a lot. Sound quality has improved since the first stream today. Are you then automating the trade by placing stops and limits? Let's answer that. I automated the stop trade, not the profit take, unfortunately, right? And only one can be automated at a time with Binance. You know what, maybe it doesn't pay to answer these in writing actually here. So where did you see how you lost 0.5%? Okay, and so when you have dollar tether, then is US dollar staying in Binance until you purchase again? So yes, so when you have a you're holding tether, you are actually not holding US dollars. No, you are holding a tether token, and that tether token is redeemable as it's pegged to the dollar for $1. So if you want to cash out your tether in an off ramp, you'll get dollar for dollar, right? So for example, if we go to CoinMarketCap, and I don't know if I have that. Let me just go. Let me just trigger something. I like doing this. Let's go to trading. So I set these little bots up here, right? So if I type in here, this is on the side here. If I type in fear greed, I set up this little bot that it'll automate a little response. It'll give you the fear and greed index today, which is 19, which means overall BTC, Bitcoin, most people are afraid and selling. And as they say, when there's fear and blood in the streets, that's a good buying opportunity. So whenever the fear index is up to up here, that's when people are manic and they're buying like crazy, and it's probably a good time to sell, right? So this is a low point in terms of the sentiment toward BTC. So that's a little bot I set up. If you type in fear greed, that'll just pop up rather than going to the website and everything. The other one I typed in was BTC price, and if you use that, little bot will pop up and it'll send you to CoinMarketCap, and then when you go into CoinMarketCap, it tells you Bitcoin price and so forth. So when you're in CoinMarketCap, the other thing to note is now there's an app for this on your phone as well, but if you want to check on the web page, you'll see the listing of all the cryptocurrencies, right? In order, it depends how you want to order it. If you want to order in market cap, that means the majority of people, or this has $173 billion worth of people have purchased $173 billion worth of Bitcoin. It's problematic, but anyways, take it for that. I can explain that later, but take it at face value for now. Oops. I want it by market cap. Yeah. And then you see the next biggest coins by market cap, and then when you get down here, you see Tether, right? So Tether, there's currently $4 billion in Tether, and right now the price of Tether is $1.01 USD. So that fluctuates, and it can fluctuate as you can see here. But look at the fluctuations. They are between like 99 cents and $1.01, and that's what makes it a stable coin. So just to be clear, when you hold a Tether, you hold a token which is redeemable for $1 US. So when we look here at, let's look at the last 1 year, you'll see Tether has fluctuated in price. This is the price here, if I'm not mistaken. Yeah, price in USD between, at low points, 97 cents, at high points, $1.03. Okay, so the lows and highs are 6 cents. So that's a stable coin. Okay, that's, I mean, the Canadian dollar doesn't even do that against the US dollar. So when you hold a Tether, let's see what's going on here. Oh, this might be a buying opportunity. Let's see. Might be. I don't like the way the line never really crossed, so I'm just gonna do this instead. That's what I'm gonna do. This is where my tea leaves, you know. It's not the cleanest of trends, but you see some markers here. This might be a buying opportunity. It might be. Let's wait a second. So when you look at your funds right now in Binance, I have 372. I don't know what the difference is here, why they're holding $2 from me, but 372 US dollar tethers. And if I were to go in an off-ramp exchange and sell my tethers for fiat, either the Canadian dollar or US dollar, it will be taken at 1.01 dollars per tether right now. And yeah, so it's held in a crypto hot wallet. I do not have the key to this wallet. I have the public key, and the private key is associated with my login, and I can only access it through Binance. If I did want to pull my US dollar tether off, I would withdraw it like any other token. I would put it into cold storage, and then I would have the public and private key to that as well. You treat it like a token, right? So I don't know what to do with my line here. Look, it's a little problematic. So I'm gonna kind of do this, right? This is where it gets a little coffee grind, tea leafy, and I'm gonna see where I'm at here. Like, so the MACD is coming up, the stock RSI is coming up. I'm gonna clone one of these, so I'm just gonna right click, clone. So I like my setup, right? It's ugh. Oh man, I grabbed the wrong one. So my setup is good. See, I already got it at 1% and 0.5%, right? And you asked, how do I know I sold at 0.5%, right? My stop was set at 0.5%. So how I know that is because I did my little setup here, right? I made my little tool. That's why I love this tool. And on the desktop option, it's not available, right? So when I set this up visually, I know that that would have been a 1% gain if the graph, the price action exceeded that. And you can see where I sold. So this would have been my stop right here. So it told me my stop was 9845. You see that little red tick there? 9845, right? And my profit at 1% would have been 9992, right? And then that middle ground right there was 98 whatever. So it's not 100% perfect, but it gives you a good indication of where these markers. So I took that number because I knew that's where I bought in. So I took that number, the 9845, and I use that as my stop. So now I know to set it to that value. So if it does fall below that value, that's 0.5%. Okay, so that's what I use to do my little calculation. So now if I come back with my new calculation, see, it's set up the same. It's set at 0.5%, 1%. If I move that into play and I say, oh look, I'm looking to make a purchase here, imagine, okay? And I have everything set up, right? I click, let's say I click this price and I click buy, and I can even come in here, and if I want to be super accurate, I can change the coordinates. I can change the entry price to exactly the price that's confirmed in my order history. Okay? So for example, let's say that was a buy price. Okay? So let's say I copy this price. Okay, I copy and I place it in here. I hit paste. Okay. Now it moved the whole thing up. So let's see where it went. Well, where did it go? Oops. Excuse me. Where did it go? Jeez, did I lose it? Let's move this guy. Where did he go? I don't know where he went. Alright, let's clone that again. So let's clone and take another one. Okay. Let's zoom in a little bit here. Expand the... Why is it giving me a problem here? Okay. Again, if you ever get lost in this kind of like this stuff, you can just hit auto and it kind of sets you up again, right? So let's say I want to purchase around here, 1.02%. Let's change my coordinates a little bit. 9872. Let's just bring it down to 9871, for example, and just click OK. And it didn't really change my percentage much. Let's change my percentage manually. There we go. There, that's 1%, 9866. Okay, and then my stop is at 0.5%. So it's telling me. So when I set based on where I decide to purchase. So let's say, let's extend this a little bit. Let's say I decide to purchase somewhere in here, right? I'll just move this in. So, all right, that's where I bought in, and then I'll grab that price that's showing right here, 9643, and I'll put that in there, and that'll be my stop, right? And then I just have to eyeball the the 1% gain. So when I see the graph just shoot up over here, then I'll just be like, grab this number and sell, right? It's not as critical when you're making money, right? When you're losing money, it's a little more critical that you want to make sure you don't exceed your stops. So that's why I would take priority and say set your stop rather than set a target as your exit point, right? Because your target, you can just be like, oh, you're going to be euphoric, you're going to be looking at it, oh, it's amazing, look, I'm making money, okay, you can sell here, you can sell up here. Try not to sell higher, try to have the discipline to sell within, I mean, just around your target. That's why it's called scalping. You're kind of just, you know, skimming off the top, right? So don't expect it to keep going and then you lose your profits, right? Just sell, you know, when you get around 1%. But be more careful with your stop, and that's why you set that one, right? So that, I think that answers your question. Let's go back to here. Where did you see how you lost 0.5%? Yeah, so how I know I lost 0.5% is in the price. So I set it to 9845 because that's what it was showing up here, right? That's where I got what price I wanted to set as my loss, and I copied it in here. And then when you see down in your order history, well, it was sold at 9845, right? And it was filled. The total order was filled, and you can see the amount confirmed was filled, and that's how much, you know, money I got out of it. And that was the triggered conditions, 9845, and it was filled. So I know that my little setup long, my little tool here, my little long position, allowed me to know my 0.5% loss, the exact price, and there I know it's confirmed. Right. So let's go back to your question here. Are you then on? Yes. Where did you? So that's answered. Where do you see how that's answered? So when you have a dollar tether, is it in USD state? No, again, it's not USD. It's in USDT, US dollar tether, and it's held as a cryptocurrency on the hot wallet Binance exchange. And yeah, so that's everything. I think we're good to end this session. My Aisha is pissed, so I gotta keep going, or I gotta get going. And so again, just before I go, I just want to show you, if we look at my little what do they call that? Trend line? Yeah, the little trend line. You'll see, so it's moving. It's bigger than the graph wants to allow me to see. So my little trend line is indicating that those are two nice tops to connect, and I don't know when the next buying opportunity will come in. It might be down here, but see, having had that stop loss, right, and really minimized my losses. Let me see if my pen works a little better here. Really it doesn't. Really minimizing that loss allowed me to then get into a much better position down here somewhere and then buy in again, and rather than just get hurt that badly waiting on a swing trade or waiting hours or days for it to come back, right? And that's the whole point, not to get stuck in a trade. Minimize your loss, don't get stuck in the trade, come back again and make money later, and don't lose sleep over it. And now that I'm in US dollar tether, I made one bad trade. Okay, I lost $3 or $2.50. I'm not going to be pissed off if I go take, you know, half a day off and go do something else with my day and maybe come back and continue trading at night, or when conditions are a little better, or maybe the market's just bleeding right now and it's not the best time to be day trading. So, you know, now it's time to take a break. And again, we see my little trend line. We see the median line is coming over again. We see the stock RSI is peaking up again. The MACD was low, and it might just have a cross. We might be in a good buying position again in a few minutes. And this is day trading, involves this kind of level of attention. When you get better, maybe you can take bigger breaks in between. I am making a video and talking through the whole thing, so, you know, I wouldn't have put this much time into it normally. I would have maybe gone on with my other work. I would have gone on with making a sandwich. I would have gotten on with a whole bunch of other things, but this part of this was making the video an instructional video. So this is a good time to end it. I would have loved to end it with a successful trade, but now that you know what we've set up here, all I have to do is post these little captions, almost like visual captions, and you'll know that, hey, Ali made a series of 5 successful trades or whatever. And I'm going to be honest with every trade that I make, so you'll see the wins and losses and see if the strategy is effective in any way. Okay, I think that does it. Let me just double check what's going on one last time in the video here. We're live to watching. Yusuf's still here. I think I'm going to delete this public address. It's not necessary. And that'll be it. So when I close, this will be archived and you'll be able to see this for anyone else who wants to watch this later. I think that's great to sign off. I can't believe you hung in there the whole time, Yusuf. You must have been cooking or doing something and just had your earpiece in. I don't know what you were doing. So, okay, sign off time. I'm going to use this software to stop streaming, and we are gone.